hotels ऐसे और QIP book full marks by paper.
Hello. Done. Very good morning, everyone. How are you all? Everyone fine? Chalo. So today will be the last day for the marathon. We'll be completing the balance chapter. Now today whatever chapter left is what we need to do in days 33. In days 33, 101. In days 10 also. In days 10, one chapter is left in days 10. Then what? 34. And there is one topic for 116 sale and lease back. And then what? There are analysis of financial statement, but that does not require any revision because that is based on schedule 3 requirement. That is only you need to do all the questions. So that is not a separate chapter, it is a combination of all India's and schedule 3 requirement. And then there are two new chapters. One is accounting and technology, and one is what? Professional and ethical duties. Okay, correct. So these two chapter I will say better you do the amendment classes for the lectures, because if you are doing for the first time, better you do that only, because of course you'll be doing for the first time only. So that is already uploaded in the YouTube, so you can listen that. This professional and ethical duties are already uploaded. This accounting and technology I will upload soon, so that you can refer there, accounting and technology. And then accounting and technology is not, but it is not my job, because that is related to technology actually. That is nothing but theoretical chapter. You read the entire point and memorize that. But then also I will upload soon in the YouTube. So basically the today the content will be in days 33, 101, 10, 34 and 116 last, that is sale and leaseback transaction. Okay. Before that, any doubt in MCQs? Bolo. So one doubt came in conceptual framework chapter. The doubt came because the answer was not given. The usefulness of financial information is enhanced if it is. So the answer is 4 only. Write down answer 4. However, this type of doubt, I think you should refer the book only, the answer will get. The usefulness of financial information is enhanced by comparable, verifiable, timely and understandable. Correct now. Understood? Of course, with that options you will have doubt which one is the best option. So for this memorization is required. Got this point? Yes, sir. Any other doubt? Any other doubt you have in MCQs? No doubt? Okay, sir. We will start with India's 33 earning per share. Now, when I say earning per share, so earning per share are of two type. Everyone know. One is what? Basic earning per share. One is diluted earning per share. Now, basic earning per share means what? Net profit attributable to equity shareholders divided by weighted average number of equity shares outstanding during that period. The formula is very simple. Net profit or loss attributable to equity shareholders divided by what? Divided by weighted average number of equity shares outstanding for that particular period. Now, when I say diluted, so diluted means what? Diluted means what? Whenever there are potential equity shares, so because of conversion of potential equity shares into ordinary equity shares, if the earning per share decline, that become what? Diluted earning per share. So we need to give the effect of what? Effect of dilutive potential equity share in the numerator and denominator of this basic earning per share. So can I say it will be adjusted numerator? Adjusted numerator means this you need to adjust for the effect of what? Dilutive potential equity share divided by adjusted denominator for the effect of what? Dilutive potential equity shares. Means this numerator and denominator, if it is adjusted with the effect of, well, dilutive potential equity share, then that will be what? Diluted earning per share. So only we need to now concentrate how to calculate this numerator and then how to calculate this denominator. So let us first start with the numerator. The numerator means net profit. To which net profit? Now, when we say, just try to understand, when we say consolidated SOPL. Now, whenever any Ind AS is designed, to Ind AS has been designed from consolidation point of view. Ind AS has been designed from consolidation point of view. Can you see if you have understood from consolidation point of view, automatically you have understood from individual point of view. But suppose Ind AS has been designed from individual point of view, then another clarification required for what? Consolidation point of view. Therefore, Ind AS has been designed from which point of view? Consolidation point of view. Correct now. So in consolidated SOPL, can you say first you calculate profit for the year? Profit for the year. Yes or no? Correct? Means if you see the format of SOPL, what is the format? The income less expense, then this become profit before exceptional item and tax. Then we do adjustment for what? Exceptional item. So this become profit before tax. Then we minus what? Tax expense. So this become profit from continuing operation. Then we add what? Profit or loss from discontinued operation. This become profit for the year. This become profit for the year. Understood this point? Now this profit for the year will be attributable to the owner of what? Owner of parent company. To the owner of parent company, and the balance will be attributable to NCI. This balance will be attributable to NCI. Then we add OCI in this other comprehensive income. Then other comprehensive income, there will be some item which will be reclassified to PIR. There will be some item which will not be reclassified to PIR. So total other comprehensive income will come. Other comprehensive income. So this will be also shown into two parts. Attributable to what? Owner of parent company, and attributable to NCI. Then we add what? Total. Then we add these two. This become what? Total comprehensive income. Then again we write down attributable to what? Owner of parent company, and attributable to what? NCI. Means can I say this A, B, C, D. So this become A plus C, and this become B plus D. B plus D. Understood this point? This point have you understood? Now the question is that when we are calculating EPS, so EPS numerator will start with profit. So from which profit? Now doubt will come whether it will be profit from continuing operation, option number A, or of course it will be total profit for the year B, or it will be only profit for the year attributable to the owner of parent company C, or it should be the total comprehensive income attributable to the owner of parent company. Doubt will come now. So it will be either D or E. So which will be the starting point? Have you understood? Means you want to calculate EPS. So EPS we want net profit. So which will be the starting point for the calculation of numerator? Whether it will be only profit from continuing operation, or it will be profit from discontinued operation, that is not possible. Then profit for the year, or profit for the year means combination of continuing and discontinued operation, or it is only profit for the year attributable to the owner of parent company, or it is profit for the year plus OCI means total comprehensive income, or it should be total comprehensive income attributable to the owner of parent company. What do you think? Which one is correct? Which one is correct? बोलो. Doubt आया ना? Profit for the year means B. Profit for the year means B. Doubt is there or not? So whenever this type of question normally they ask, so doubt will come. Doubt will come, but they are not asking this type of question only one time. They have only one question of this nature has been given ICAI study mate, that is also asked in exam. That is also asked in exam. But sometime what happen? Sometime what happen with question we understand, or when they give some detailed information will be confused, and with MCQs of course will be confused. With MCQs will be always confused. If they have given such an option, which is the starting point to calculate numerator, of course will be confused. So it will be profit or loss attributable to what? Owner of parent company. This will be the starting point. This will be the starting point. So the starting point is what? Profit or loss? Profit or loss below? Profit or loss attributable to the owner of parent company. Profit or loss? Below profit or loss attributable to the owner of parent company. Understood? This point have you understood? Yes sir. Now what is the objective? That right now what discussion we are doing, that how to calculate numerator. The objective is what? To convert profit or loss attributable to the owner of parent company to profit or loss attributable to the equity shareholders of parent company. Now I am using the word parent company, but if it is not a parent company, then just replace parent company with that company name. I said this chapter has been prepared from which point of view? Consolidation point of view. But suppose it is not a parent company, it is a standalone entity, so you will say profit or loss attributable to that entity only. Correct now? So what is the objective? Objective is what? Don't think about right now, don't concentrate on this point. Okay, are you able to understand my feeling? So don't give importance to this parent company. Okay, this can be parent company, or it can be any other entity also. It can be any other entity also. I hope you have understood. Correct. What is the objective? To convert profit or loss attributable to the owner to profit or loss attributable to equity shareholders of that company. Equity shareholders of that company. Now one doubt will come. So what is the difference between owner and equity shareholders? What is the difference between owner and equity shareholder? Doubt will come now. अरे बोलना रही. What is the starting point? Profit or loss attributable to the owner of any entity. Any entity chalega. We need to convert this profit into what? Profit or loss attributable to the equity shareholders of that company. Now the question is that what is the difference between owner and equity shareholders? Owner is a wider term. Owner will include all equity participants. Owner will include all equity participants. Means this owner is what? Holder of equity instrument. Holder of equity instrument, and this equity shareholder is the holder of what? Holder of equity shares. Holder of equity shares means there can be some preference shares which has been classified as what? Equity. There may be some warrant which has been classified as equity. Correct now? There may be some other instrument which has been classified as equity. There may be some puttable instrument which has been classified as equity. Are you getting? So equity instrument is a wider term. So we need to convert profit or loss attributable to the owner to profit or loss attributable to equity shareholders. Means can I say whatever profit is available to other owners should be deducted. Whatever profit which is available to the other owner means other than equity shareholders should be deducted. Correct? Should be adjusted. So that adjustment requires how many adjustments are there? This is one adjustment, then second adjustment, then third adjustment, and fourth adjustment. There are how many adjustments? Four adjustments. So first we should deduct preference dividend. So deduct what? Preference dividend. Now preference dividend are of two types. Either preference dividend to cumulative preference shareholders or preference dividend to non-cumulative preference shareholders. So what Ind AS 33 says that preference dividend to cumulative preference shareholders will be deducted whether declared or not declared, but preference dividend on non-cumulative preference will be deducted only when it is declared. Understood? Fine. So preference dividend for cumulative preference shares whether declared or not declared. Preference dividend on non-cumulative preference shares only when it is declared. Now whenever question is silent, always will assume it is cumulative. If the question has not given cumulative or non-cumulative, so always assume cumulative and always deduct. Understood? So normally question remains silent. If question remains silent, don't assume it is non-cumulative. Always assume what? It is cumulative. Understood? Have you understood this point? So I think first point you have understood. My question to you all, everyone, this preference shares, whatever we are saying, this preference shares, which preference shares? Because there are now two type of preference shares. One is financial liability, one is equity instrument. So we are discussing about which preference share, which has been classified as financial liability or which has been classified as equity. Have you understood what I am saying? One second, I repeat the question. There are two type of preference shares. Now any preference share which has been classified as equity or any preference share which has been classified as liability. So right now we are discussing about which preference shares which has been classified as equity. Now second question arises, any preference shares, suppose redeemable preference shares, so to them also we will pay what? Preference dividend. So what about that preference dividend? Means suppose any redeemable preference shares which has been classified as what? Financial liability. Any redeemable preference share which has been classified as financial liability. So of course entity will pay preference dividend to them also. Correct. What about that preference dividend? Already deducted from profit or loss, because that preference dividend will be an expense. So already deducted from SOPL to calculate what? Profit or loss attributable to the owner of parent company. So any preference dividend which is related to any preference shares which has been classified as financial liability has been already deducted from SOPL to calculate profit or loss attributable to the owner of parent company. So right now we are only discussing about those preference shares which have been classified as equity. Correct. Now one more question. When I am saying preference dividend, when I am saying preference dividend for financial liability, preference dividend for preference shares which has been classified as financial liability, but that preference dividend will be calculated by contractual rate of interest or by using market rate of interest or by using EIR. Are you listening all the questions? Listening? Correct. One second. So when I am saying preference dividend on preference shares which has been classified as financial liability, so that preference dividend will be calculated by applying contractual rate of interest or market rate of interest or EIR. Have you understood the question? So how many are saying contractual rate of interest? How many are saying market rate of interest? How many are saying EIR? EIR is correct. Financial liability, that is an expense. Preference dividend is nothing but one type of interest expense. Dividend and interest on financial liability will be calculated by applying what? EIR. Kasam khao. Understood? When I am saying preference dividend expense means what? It is equal to interest expense. Interest expense is calculated by which rate of interest? EIR. I am just revising the concept. However, this is not a part of this chapter. However, this is not a part of this chapter, but sometime what happened, it is quite possible they have given two preferences in this chapter. One has been classified as financial liability, one has been classified as equity. So be careful about that point. Till now that type of question has not been asked. But if they have given, so most of the student will be confused. Understood what I am saying? Have you understood this point? So right now we are discussing about only those preferences which has been classified as equity. Now any preference dividend which has been classified as equity, their preference dividend will be calculated by which rate of interest? Contractual rate of interest. Very good. Now because this is not an expense, so here whatever you are calculating, that is based on what? Contractual rate of interest. Contractual rate of interest means whatever rate of dividend is fixed. Whatever rate of dividend is fixed. Understood? Have you understood? So for them preference dividend is calculated by applying contractual rate of interest. Contractual rate of interest. Understood this point? Have you understood this point? Correct. Now I think the first adjustment is very simple. No discussion required. No discussion required. Now second adjustment is what? Gain or loss on settlement of preference shares. Gain or loss on settlement of preference share. One second, but we are discussing about which preference shares? We are discussing about preference share which has been classified as financial liability, ki preference share which has been classified as equity. Bolo. So gain or loss on settlement of preference shares. But we are discussing about which preference share? Classified as financial liability or classified as equity? Classified as equity or financial liability? How many are saying equity? How many are saying financial liability? And how many are saying sir कुछ भी कर दो मजा आ रहा है? Apply your common sense. One second, I said apply your common sense. I have given the background of this chapter already. When I started, I have given the background. So if I have given the background, you need to only think about concept. Apply your common sense. Apply your common sense. I said that what is the objective? Objective मैंने पहले बता दिया. Objective बताया. What is the objective? To convert profit or loss attributable to the owner to profit or loss attributable to equity shareholders. Already I have given what? Now you only say financial liabilities owner. So apply common sense. Apply common sense. We don't have common sense only, na sir. That is the point. So can I say everything is now related to what? Whatever we are discussing, that is related to what? Equity only. Whatever we are discussing, that is related to what? Equity. It means this is also what? Classified as equity. Once again, any gain or loss on settlement of financial liability is gain or loss which has been already transferred to what? SOPL, which has been already transferred to SOPL. So any gain or loss on financial liability is already debited to what? Debited or credited to what? SOPL na? Are bola re? Understood what I am saying? So whatever right now we are discussing about what? Equity. So it is quite possible there is some irredeemable preference here. Correct. For which settlement was not planned, but it can be settled. Na? There can be some early settlement or there can be some pre-settlement. There can be some settlement or not. So after some time we decided to settle it. So there can be gain or loss on settlement. So gain will be added and loss will be deducted. So any gain on such settlement will be added. Any loss on such settlement will be deducted. Gain means what? Gain means what? If consideration paid is less than carrying amount. We suppose the carrying amount of 1 lakh, you are paying 90,000, that become gain. Loss means what? Whatever you are paying higher than what carrying amount, that become loss. So gain will be deducted. Loss will be, sorry, gain will be, my mistake, gain will be added. Loss will be deducted. Understood. The next point is what? Come to point number 4. Point number 4. Ki any expenses or losses adjusted against securities premium or any other reserve as per Companies Act which is otherwise adjusted against profit and loss account. I hope you know about preliminary expenses. That preliminary expenses can be also write off through securities premium account as per Companies Act. If you know, if you have done in Bachpan CA Inter, the securities premium has 5 purpose. Securities premium have 5 purpose. So one of the purpose was to write off what? To write off preliminary expenses. But as per India's 38, preliminary expenses will be charged to what? Profit and loss account. As per India's 38, preliminary expenses should be charged to profit and loss account. But can I say Companies Act will override the requirement of Ind AS. So it is quite possible some company, some companies following Companies Act, and they may write off such expenses through which account? Securities premium account, which is otherwise debited to what? PL account. So what they are saying, if such company has done that treatment, accounting treatment is correct. We are not going against the Companies Act. Well, but for calculation of EPS, that preliminary expenses which has been adjusted through securities premium account should be also deducted. Means we are not changing the accounting treatment. Means we are, this chapter is nothing to do with what? This chapter has nothing to do with the accounting treatment. In this chapter only we are calculating ratio. Ratio means EPS, numerator divided by denominator. I hope you are understanding. So in this chapter we are not discussing the accounting treatment. So whatever has been done as per Ind AS or Companies Act, that will be followed in books of account or in financial statement. But for calculation of EPS, because preliminary expense should be deducted from what? PL, to deduct it, which has been already debited to what? Securities premium account. To deduct it na. But you are not reversing the journal entry. Huh? Don't reverse, don't do any rectification journal entry in the books of account. Are you getting what I am saying? So that preliminary expenses deducted, but it should be net of what? Tax. Net of tax. Understood is fine. Understood. Then the last point, which is also important, point number 3, amortization of discount of premium on increasing rate preference years. So I need to explain what is the meaning of is increasing rate preference years. So what they want to say, increasing rate preference years are those preference years which provide for a low initial dividend to compensate an entity for selling their preference shares at a discount. So normally what happens, suppose I started a business, so I know that for the few years I will be not doing any operation because I will do the development of that business. So suppose the main commercial business will start after 5 years, but I want fund right now. So I will just convince you to give me fund right now, and I will not give you dividend for the first 5 years. I will give you dividend only after 5 years. So what you will ask, okay, happy, I will give, but give me is shares at what? Discount. Means whatever discount has been given, that is nothing but to compensate dividend for the first 5 years. Means that discount is nothing but dividend. So what Ind AS 33 says that for EPS calculation, not for accounting treatment, for EPS calculation, that discount will be considered as imputed dividend. For the next 5 years, I am going to amortize the dividend in how many years? Next 5 years, and deduct the dividend from what? Numerator, to calculate what? EPS. Have you understood what I am saying? Once again, I am not changing the accounting treatment. Accounting treatment will be based on whatever we have done till now. So this chapter has nothing to do with accounting treatment. One second. Increasing rate preference shares means what? Any preference share that provide low or no, either low or no dividend, low initial dividend to compensate the entity for selling the preference share at discount. So the discount become what? Imputed dividend. For how many years? As per my example, first 5 years, and that dividend should be amortized in how many years? 5 years. So suppose amortization is what? 1 lakh. Let man lo. So this 1 lakh will be deducted from what? Numerator, to calculate EPS. Understood? That become amortization of discount on increasing rate preference years. Sir, premium bhi likha na sir? Amortization of discount of premium. So there can be premium also. Let us come to next point. Or an above market rate dividend, which will give higher dividend. To in later period. Higher dividend in later period to compensate investor for purchasing preference shares at premium. Now suppose it is quite possible that 1 lakh is the nominal value, but we want 1,50,000 right now. It means you are purchasing preference as a premium. You are giving higher amount to us. 1 lakh के बदले कितना दे रहे हो? 1,50,000. This 50,000 will be compensated in later period by giving what? Higher rate of dividend. Higher rate of dividend means whatever premium I have received, that is nothing but imputed dividend or not. So that will be also amortized in the respective period. So it is amortization of discount or premium for increasing rate preference years. Normally in exam they will ask discount, they will not ask premium. Understood? Have you understood this point? Correct. So don't worry, in exam they will give you the amortization amount. So if they have given amortization amount, deduct it. But if they have not given amortization amount, we need to calculate it. So how to calculate, I need to explain. How to calculate, I need to explain. However, chances are rare, but they can ask. They can ask. So how to calculate? I just taken one simple question. Let us understand. NTD issued non-convertible, non-redeemable Class A cumulative preference shares of rupees 100 par value on 1st Jan 2001. But on non-convertible, non-redeemable, it is equity or liability? The equity or liability? It is equity or liability? Are by non-convertible, non-redeemable, liability. Whether there is any obligation to pay, is not irredeemable, na? Irredeemable, so there is no obligation to pay. And cumulative dividend. So dividend is always at the discretion of what? Entity. So it become pure equity. However, for this chapter, even though you have doubt, you need to assume what it is equity only. Because if it is liability, then discussion is what? Over. So all things we are discussing about what? Equity only. We are not discussing about financial liability. If this preference shares has been classified as financial liability, then so it will become what? An expense. Expense means already deducted from SOPL, then no adjustment required, na? So in this chapter, if you have doubt also, then also assume what? Equity. Understood? If you have doubt, correct? Yes, sir. The Class A preference shares are entitled to a cumulative annual dividend of rupees 7 per share starting from which year? But what was the date of issue? So after how many years? 3 years. After how many years? 3 years means for the first year no dividend. For the first year no dividend. At the time of issue, the market rate of dividend yield on Class A preference shares was 7% per year. So 7% per annum. So 7% become market rate of interest. 7% become what? Market rate of interest. Chalega. Thus the entity could have expected to receive a proceed approximately of rupees 100 per class a preference shares if the dividend rate of rupees 7 per share has been in effect at the date of issue. Means if the every year 7 rupees was given, then of course how much proceed we receive? 100 rupees only. At the market rate of interest 7%, that will become the present value. That become the present value. In consideration of dividend payment term, however, the Class A preference shares were issued at 81.63 per share, that is a discount of 18.37 per share. Now just find out 777. Can you find out present value factor at 7%? 777. Can you find out present value factor at 7%? This is nothing but equal to what? 18.37. That is the discount. Is nothing but equal to what? 18.37. That is nothing but discount. Understood the question? So this is the question. Now this 18.37 will be accounted as what? Will be considered as imputed dividend for the purpose of calculation of EPS. Imputed dividend for how many years? 3 years. So how to amortize, that we need to understand. So we will start with what? But how much amount received initially? 81.63. What is the 7%? 7%. And then what is the dividend paid? Nothing. So this become what? Amortized cost. Then 87.34. Then also 7%. Dividend paid is 0. This become 93.46. Then 93.46. Then again 7%. Dividend paid is 0. This become 100. And from next year, can I say from 4th year, it will be 100. 7 minus 7. This will be equal to 100 or not? 100. It means, can I say this become what? Imputed dividend. The first year, how much will deduct? 5.71. Second year, third year. So if suppose this type of question come, you can do it or not. Understood? So this is only for EPS calculation for accounting purpose. For EPS calculation. Understood? Only one question of this nature has been given. That too they have given amortization amount. Correct? Means this type of question can be asked. Can be asked. Chalega? Yes, sir. Done. So can I say with this we have understood how to calculate profit or loss attributable to the equity shareholders of parent company or any other entity. Normally what I have seen in exam question, they don't trouble you in this much. They will give you what? Profit or loss attributable to equity shareholders of parent company. If they have given that, thank you very much, bye bye. If they have given this amount, thank you very much, na. So normally it has been seen that they do not trouble you much for the profit. But if they have not given, so they will trouble you. So it means you need to calculate and then calculate what? Earning per share. However, more focus from examination point of view is in what? Weighted average number of ordinary shares. More focus should be on what? Weighted average from examination point of view. From examination point of view. Chalega? So how to calculate weighted average number of ordinary shares outstanding during that period? So of course it will be weighted. The weight should be the time weight. Time weight means the number of days it was outstanding for that entire year. Now that weight should be calculated from which date? The weight should be calculated from which date? My question is that when the amount is received or receivable. Are you getting what I am saying? Suppose the equity shares you have issued, an amount is received or receivable. The consideration may be received or receivable. Suppose receivable was today but received after 5 days. So that weight should be from today or after 5 days. Understand what I am saying? The question not able to understand. Suppose this is the due date and this is the date of received. So we should include that equity shares from which date? From A or from B? From A or B? A is correct? So A is correct. From the date when it was receivable. From the date when it was receivable. However, normally in exam they don't ask this type of question, but this is important from MCQ's point of view because they will give only one date of issue. So we'll assume the received date and receivable date are same. But if they have given this type of date, so it is from a date when the consideration is receivable, not from a date when the consideration is received. Chalega? Yes, sir. So weight should be included from the date the consideration is receivable. The consideration is receivable. This might be important for MCQ question. This might be important for MCQ question. So they will give you that from which date it should be included in weighted average number of shares. So they will give you these circumstances. Issue of equity shares in cash included when the cash is receivable. Issue of equity shares on conversion of debenture. So included as on the date of conversion. Issue in exchange of liability. Issue in exchange of liability included from the date when the settlement become effective. Included from the date when the settlement become effective. Issue of equity share for acquisition of asset. Correct? So included from the date when the asset is recognized. Asset is recognized. Means asset is recognized in the books of account. Correct? From that date. Issue of equity share for rendering of services. Included from the date when the services are received or rendered. Understood? Last, for business combination included from the date of acquisition. So this type of question can be asked in exam MCQ based. Correct? Understood. Now how to calculate weighted average number of shares depends upon the nature of equity shares. Depend upon the nature or class of equity shares. So there are different points. First, if suppose they have given partly paid up shares. Now partly paid up shares, you know what are partly paid up shares. Now partly paid up shares are of two types. Either they are entitled to dividend or they are not entitled to dividend. But my question to you all, if everything is silent, so whether partly paid up shares are entitled or not entitled to dividend? Partly paid up shares are entitled to dividend. Means if question is silent, what will assume? partly paid up shares are entitled to dividend. So if partly paid up shares are entitled dividend, then it will be included for calculation of basic earning per share. But if partly paid up shares are not entitled dividend, means question has informed you these partly paid up shares are not entitled dividend, then they are not included in basic earning per share, but that will become potential equity share because they are entitled dividend when they become fully paid up. So that will be included for diluted earning per share. Understood what I am saying? So partly paid up shares with dividend right will be included for which earning per share? Basic earning per share. And partly paid up share without dividend right? Diluted earning per share. Now how to include that we need to understand? How to include that we need to understand. Correct. Now this you all know, but then also for practice I am taking. Suppose this is a question given, calculate basic earning per share. 1/4/2006 equity shares of rupees 10 is outstanding. If nothing is given, then fully paid up. Huh? If nothing is given, then fully paid up. 30th September issue equity shares of rupees 10 is rupees 6 paid up. On 1/1/2007 call rupees 2 on 10,000 equity share. Net profit attributable to equity shareholders is how much? 3 lakh. So how to calculate basic earning per share? Batao. So what India 33 says that partly paid up shares will be converted into equivalent number of fully paid up equity share for the purpose of calculation of EPS. Understood? So how to convert? But in this case, basic earning per share will be equal to what? What is the profit given? 3 lakh. Because the numerator is given, na? Now, what is the opening number of shares? 20,000. This is outstanding for how many months? 12/12. Then how many equity shares issued? That, but it is 6 rupees paid up, so we will convert 6 into what? 10. It will be 10,000 into 10,000 into 6/10. It is outstanding for how many months? It was issued on which date? 30th September. October, November, December, January, February, March. It is 6/12. 6/12. I will always suggest that, we think we are champion, but I always have seen the student do mistake in month only. And normally when they have given 1st September now, they have given 1st September, many students will take 6 months. So be careful. Be careful. In exam, one mistake means 0 mark. In this question now, suppose you have taken by mistake 7 by mistake. So whether they will give any marks? What do you think? What do you expect? Everything is correct. Only you have taken 7/12. You expect any marks? Don't expect. If you are expecting. So can you say 6 marks question, 5 marks question become what 0 marks now? Only one mistake. So I will say whatever month count in hand and twice cross check. Cross check. Are you getting what I am saying? You say I have done what? I was knowing 6 months, but then also I have done what? October, November, December, January, February, March. I have done in front of you na. Are bolna re? You have seen or not seen? I was doing that, but I was knowing it is 6 months. To inform me that I also cross check. I also cross check. Understood? Correct? So be very much sure about this, whether 6 months, 7 months, 8 months, whatever. So it is 6/12. And then again receive how much? 2. So we'll convert into what? 10. And it is outstanding for how many months? Batao? It is 1/1/2007. How many months? Into 4. Batao. देखो 3 4 4 3 5 4 9 4 9 6. अभी होगा, अभी यहाँ पे बहुत देखो डायरेक्टली डोंट डू. I will say देखो if you are saying 4 here ना, then in exam also you will take 4 only, and that time there is no one to see you like this ना. Huh? Whether you want someone to see like this? Huh? No one is there ना. अरे बोलना नहीं. It is just like what? Doing suicide. I'll say one simple word, just like doing suicide. Yes or no? So cross check, cross check. So what is there? It is what? 3/12. Now can you say once you have understood this calculation you can do because you have calculator. So now our objective is to find out what? Denominator. Understood? Don't do calculation, don't do. We are not here to find out this basic earning per share. My objective is to give you what? numerator and denominator. Calculator you have, calculate it whenever you have time. Understood this point? So this understood. Now whenever there is a partly paid up share without dividend right, already I have explained that because they are not entitled dividend, therefore that will not be included in basic earning per share, but that will be included in diluted earning per share. So if suppose same question was there, so what will be the basic earning per share? If same question was there but without dividend right, so what will be basic earning per share? 3 lakh divided by what? 20,000 into what? 12 by 12 plus nothing, because this will not be considered for what? Because it is 6 plus 2, again it is partly paid up only. It has not become fully paid up during the year. But in diluted earning per share, what will take? Diluted earning per share. So this will become what now? Diluted earning per share. Have you understood this point? Let me ask you one more question. Suppose ki on this is 1/4, this is 31st March. On 1/5 you have issued 10,000 equity shares of rupees 10 each, and called up amount is rupees 4. And again on 10,000 equity shares, again you called up 6, and suppose these are not entitled to dividend, but of a basic earning per share, how much you will take? Basic earning per share, how much you will take? You will take, you will not take? Bolo. So can you see it become fully paid up shares on this date? It means it become ordinary shares from this date now. So from this date to this date, this will be included in what? Basic earning per share. Basic earning per share. Are you able to understand? So how much? 10,000 into for how many months? Acha date nahi diya. Suppose 1/1. So how much? 3 by 12. But for diluted earning per share batao. Can you say for this pay it is diluted? For this particular pay it is potential equity shares or not? So for how many months batao? 10,000 into what? 4 by 10. For how many months? पक्का? पक्का ना? 8 by 12. Understood? Correct. Do one question right now. Everyone do. Net profit 10 lakh. Net profit is net profit attributable to what? Equity shareholders. On 1/4, 1 lakh shares of rupees 10 each outstanding. On 1st July, issued 1 lakh equity shares of rupees 10 each, rupees 6 paid up. On 1st Feb, receive call amount of rupees 4 on 1 lakh equity shares. These are not entitled to dividend. It is given the question, huh? Basic earning per share will be what? Basic earning per share will be 10 lakh divided by 1 lakh into 12 by 12 plus what? 1 lakh 1 lakh into 2 by 12 into 2 by 12. Correct. Understood? So how much it is coming? Chalo 8.57. Okay. 1 lakh 667. Now diluted earning per share will be what? So diluted earning per share always start with numerator and denominator whatever you have calculated, and then give the effect of what? So potential equity share effect, numerator will be nil. Denominator, how much it will increase? 1 lakh into 6 by 10 into for how many months? Seven, 8, 9, 10, 11, 12, 1. 7 by 12. 7 by 12 na? Chalo. Very good. So what is the answer? $6.38. Understood. So I have just given one question. This type of question can be asked in exam. Till now though not asked, but can be asked. Have you understood this? This you have understood. So partly paid up shares without dividend right also you have understood. Now come to different class of equity shares. So whenever we have different class of equity shares, so what IND 33 says that first you convert all class of equity shares into one class, and then calculate earning per share for that particular class, and then identify the earning per share of different class. Let me take one question. From that you will understand. XYZ Limited has the following different class of equity shares outstanding as at 31st March 2002, having the same right with respect to voting and dividend. You can see we have equity shares of rupees 10 each, 20,000. Equity shares of rupees 50 is 10,000. Equity shares of rupees 100 is 5,000. So you have a different class of equity shares. So for calculation of EPS, first convert all class into one class. So either you convert all class into rupees 10 or rupees 50 or rupees 100, your choice. Let us convert into what? Rupees 10. So this will be what? The earning has given 5 lakh. How you'll do? Basic earning per share will be equal to 5 lakh divided by what? Of rupees 10 was 20,000. So 20,000 was outstanding for beginning only, 12 by 12. Then we have what? Of 50 rupees, how much? 10,000. So we'll do 10,000 into what? 50 divided by 10 into what? 12 by 12 outstanding from the beginning. Then we have for 100, it is 5,000. So we'll do 5,000 into 100 divided by 10 into what? 12 by 12. Similar way as we have done for partly paid up, same thing. So this is coming how much batao? 5 lakh divided by 1 lakh 20,000. This is coming how much? 4.1777. ऐसे 16667. Now okay, this become basic earning per share for rupees 10, that become 4.17. Now what is the basic earning per share for rupees 50? Rupees 50, it will be 4.171667 into what? 50 by 10. Correct now. and basic earning per share for rupees 100 is equal to 4.1667 into what 100 by 10. So what India 33 says that we should disclose earning per share for each class. Earning per share for each class. Therefore, you should calculate for each class of equity shares. Understood? However, this type of question has not been given in ICAI study material. So whether it is important or not important, I don't know. Got this point? Correct. Then coming to the next point, participating equity instrument and the two class ordinary shares. Now whenever there is a participating preference shares, okay, they are entitled to surplus profit. In that case, how to calculate earning per share? In that case, how to calculate earning per share? So for that, let me take one question. This may be important from exam point of view. The profit attributable to equity holder of the parent entity is how much? 1 lakh. Now whenever they say profit attributable to equity holder, don't be confused. This is not equity shareholder, this is equity instrument holder. Understood? So when they say equity holder, so this is equity instrument holder. Means this is the profit attributable to owner. Profit attributable to owner. Understood what I am saying? Correct? So there is a difference between equity instrument holder and equity shareholders. Equity instrument holder and equity shareholders. Understood? Equity instrument holder means owner, all the owners. Understood this point? Ordinary shares outstanding 10,000, non-convertible preference shares 6,000, non-cumulative annual dividend on preference share 5.5 per share before any dividend is paid on ordinary shares. After ordinary shares has been paid a dividend of rupees 2. After ordinary shares have been paid a dividend of rupees 2.10 per share, the preference shares participate in additional dividend on a 20:80 ratio with ordinary shares. Calculate basic earning per share. So it means for the surplus profit also they are entitled to some dividend. So how to calculate earning per share in this case? So in this case, first we'll find out surplus profit. First we'll find out the surplus profit. So surplus profit will be how much? 1 lakh minus, but 6,000 into what? 5.5. How much? 6,000 into 5.5. 33,000. This is the dividend of preference shares, fixed dividend, and equity shareholders are entitled to how much dividend? 2.10. This become how much? 21,000. How much is available? How much is available? 46,000. This 46,000 will be attributable to equity shareholders and preference shareholders on which basis? 20:80 basis. 20:80 basis. It means if each preference shares are entitled to 1, then each equity shares are entitled to 4. Each preference shares, each. It means we need to first find out how much equity dividend, additional equity dividend per share. If I say additional preference dividend per share is X, so additional equity dividend per share will be 4x. Can I say in this way? Additional preference dividend is X, so additional equity dividend per share will be 4x. So what will do? X into 6,000 plus what? 4x into 10,000 will be equal to what? 46,000. Can we calculate X? X is coming how much? X will be how much? X will be 1. It means additional preference dividend per share will be 1. So what is the additional equity dividend per share? 4. Therefore, can I say basic earning per share will be 2.10 plus what? 4. That is what? 6.10. 6.10. This become what? Basic earning per share. Have you understood this point? Correct? Simple. This become basic earning per share. This type of question can be expected in exam. Till now not asked. Till now not asked. Similar question has been given in ICAI study material also. Chalega. Then next point is what? Changes in the number of shares without changes in the value of capital. Means the same simple example is bonus shares. Whenever bonus shares are issued, then there is no changes in the value of capital. One more example is split shares. Split shares means what? Subdivision of shares. Whenever there is a subdivision of shares, number of shares will increase without changes in paid up capital. Or we can say reverse split. Reverse split means what? Consolidation of shares. Whenever there is consolidation of shares, number of shares will decrease without changes in the capital. Without changes in the capital. There are three examples of this. First is what? Capitalization of bonus issue. Second is what? Share split. And third is what? Reverse share split, means consolidation of shares. However, from exam point of view, what is important? Bonus share is important. So whenever bonus shares are issued, weight will be given from the beginning of previous year, and previous year EPS will be restated. Previous year EPS will be restated. So whenever bonus shares are there, so ignore the date of bonus issue. Take weight from the beginning of current year as well as for previous year EPS will be restated, assuming that bonus shares were issued from the beginning of previous year. Very simple. Correct. I think no explanation required. Let us take one question. Calculate earning per share. Number of shares outstanding is how much? 20,000. On 1st October 2002, means in the next year, a bonus of 1 equity shares or rupees 2 shares were outstanding was given. So it means it is what? 10,000 bonus shares. Net profit of previous year how much? Net profit of current year how much? 6 lakh. Means in this, first we'll calculate previous year EPS. So the EPS of previous year means in previous year we are doing for which year? 2001. So for 2001, so this is current year, na? Basic earning per share for current year I am writing. Okay. So this will be what? 5 lakh divided by 20,000 is equal to how much? 2.25. Now let us come to 2002. So we will calculate basic earning per share for current year. I will restate what? Basic earning per share for previous year. So current year what is the profit? It is 6 lakh. 6 lakh divided by what? 20,000 plus 10,000. Weight will be given from the beginning. Means 12 by 12. This become how much? 20. And we need to restate previous year EPS. So we will do 5 lakh divided by 20,000 plus what? 10,000. Assuming that it has been also issued from the beginning of previous year. This become how much? So these two are actually comparable. This has been done on which basis? For comparison purpose. Understood? So this is known as restated EPS. So whenever question has been given for bonus years and they have given previous year profit, it means you need to calculate restated EPS by your own, even though question is silent. Because they will say calculate EPS only. But if they have given previous year profit, it means they want you to calculate what? Restated EPS also. Understood? This is done. Now coming to next point, issue number 6. When the equity shares are issued at inadequate consideration, that is right shares. Inadequate consideration means right shares. So in that case, what IND 33 says that any right shares has two components. Any right shares has two components. One is known as paid element. One is known as bonus element. For example, you have issued 50,000 right shares at rupees 20 when the fair value of shares was 50. When the fair value of shares was 50. So what will be the paid element? Paid element will be 50,000 into 20 divided by 50 is equal to how much? 15,000. The 15,000 become the number of shares which will be deemed to be issued at what? Fair value. मैं विश्वास करता हूँ सही अमाउंट ऊपर कैलकुलेट करो 15,000. Why you all take risk? Don't take risk. रिस्क लो जहाँ पर there is no risk. Okay. ना यहाँ पे भी रिस्क है. Okay, because this same habit you will continue where? This you are practicing now. Just try practicing. Everything whatever you are doing here, that only you will follow what? In exam hall. We human being don't change our nature. हमारा body change होता है, nature change नहीं होता है. Understood? We don't change because the nature whatever I was having in when I was child, the same nature I have right now. The nature will not change. Only outer body change होता है. Nature remains same. Nature remain same. Understood what I am saying? We don't change our nature, we change our only body. मेरी बात समझे? तो जो आपका नेचर है वही एग्जाम में भी आएगा. तो इफ यू आर डूइंग लाइक दिस, तो इट मीन्स हायर प्रोबेबिलिटी यू विल डू इन एग्जाम ऑल्सो. तो थिंक अबाउट दिस ट्वाइस, थिंक अबाउट दिस ट्वाइस. ठीक है. एंड वट एवर आई एम सेइंग दैट इज ट्रू. जो बोलता हूँ सच के सिवा कुछ नहीं बोलता मैं. अंडरस्टूड? ठीक है. ओके. तो प्लीज आई एम सेइंग प्लीज, बिकॉज 1 marks is a game changer. 1 marks is a game changer. 1 marks difference will be 6 months. You need to compensate that 1 marks for how many months? 6 months. And that is horrible situation. Painful. Correct na? Yes sir. Now, so this is 20,000. So it means these are the numbers here which is deemed to be issued at fair value. So the balance become bonus element, means 50,000 minus what? 20,000. That is equal to what? 30,000. That become bonus element, and this number of shares will be deemed to be issued at no consideration. No consideration. So weight of this will be given from the date of right issue, and the weight of this will be given from the beginning of previous year, and previous year EPS will be restated. Now the question is that, so what is this fair value? So what IND AS 33 says that this is nothing but theoretical X-right fair value of equity shares. Theoretical X-right, bolo, theoretical X-right fair value of equity shares, which is nothing but intrinsic value. In simple word I will say intrinsic value, but now we need to use the term which has been given under IND AS 33, so we can't say intrinsic value in exam. We'll say what? Theoretical X-right fair value of equity share. How to calculate this? How to calculate this? This is, first we will find out pre-right fair value of equity shares plus proceeds from right issue. Means this is nothing but, when I am saying theoretical X right fair value, means the fair value equity shares after right or before right. When I am saying theoretical X right means after right, immediately after issuing right shares. So when I am saying pre-right fair value equity share, means this is the fair value of net asset. Before what? Pre-right fair value equity share means this is fair value of net asset before right issue. When we add whatever proceed received for right issue, that because it is increased by the cash consideration, so this become net asset after right issue divided by number of shares after right. Number of shares after right. Understood? So number of equity shares after right. This become the theoretical X right fair value of share. Why it is known as theoretical? Because we are calculating it theoretically for EPS calculation. Because we are calculating theoretically for EPS calculation. Therefore, it is known as theoretical X right fair value of equity shares. Only for EPS calculation. Understood? What is the formula of the pre-right fair value of equity share plus proceed from right issue divided by number of shares after right. Okay. Because once you know this, so you can calculate this. Then calculate by basic earning per share. One question only for your understanding. Correct. Calculate earning per share, net profit of previous year, net profit of current year, number of equity shares 2 lakh, and on 30th September 2006 means next year. Issue right shares on 1 new shares by each 4 shares outstanding means 50,000. Na 50,000. 2 lakh into 1 by 4. 2 lakh into 1 by 4. Right issue price 23. Fair value of 1 equity share immediately prior to exercise means what? This is what? Pre-right fair value per equity share. Be careful. Till now that type of question has not been asked. Suppose they have given fair value of equity shares immediately after the exercise of right. It means they have given what? Theoretical X right fair value of share. Then don't calculate. Till now this type of question has not been asked, but if my type of teacher is creating questions, I will create that type of question. But they are not giving me a chance, so we don't know. Correct now? So they can ask this type of question or not? Correct, to confuse you, because the rectification student will take whatever kom padta hai. Understood na? Because they want this value na. So be careful in exam. Normally 99% they will give what? Prior to exercise. But if they given after the exercise means what? It becomes theoretical X right fair value of share. There is no need to calculate that. Understood? Now this is very simple. But what is the theoretical X right fair value of shares? 2 lakh into 30. This become pre-right fair value of shares. Plus how much consideration received? 50,000 into 23 divide by 2 lakh 50,000. It is coming how much? 28 point 28.60. 28.60. Now what will be the paid element? Without 2 lakh, so, sorry, 50,000 into 23 divided by 28.60. How much? This become paid element. 210. So what is the bonus element? Without 50,000 minus 40,210. How much? Now for this, how much weight? For 9790, what is the weight? 12 by 12. For 40210, what is the weight? From the date of right issue means 30th September means how many months? 6 by 12. Be careful, sometimes they give 31st 12 also. So be careful in exam. Normally it is habituated that we take 31st March, but sometimes they give 31st 12. In one of the questions they have given year end is 30th June. If I am also a student, I will also do mistake. If I am a student in exam also, pakka I will also do mistake. So they give this type of question to check your presence of mind. Means normally who is CA? CA means they can give their maximum output in what? In the worst circumstances. That is chartered accountant. Understood? And they want to cross check that only, that ability. In CA final they don't cross check your knowledge. Knowledge hai re, article sip kar liya. You have knowledge. Once you pass CA internal, we can read and we can understand anything. So they cross check your ability to present in the worst circumstances. Can you do that? So I'm asking a question. Can you do that in exam hall? It means you are CA. This is the question. Because believe me, question paper, if it is complicated, it is complicated for everyone. Because every CA means every CA student, CA final student is studying ICAI study module. No one is doing extra question. Time ही नहीं है. That is only 1% extra question वाले. इसको counting मत करो. Understood? So everyone is doing what? All the questions of ICAI study material and RTP MTP. Means a new questions come, that is new for everyone. That is new for everyone. Last time when a new question came, last exam new question आया ना, consolidation question, lease question, 2 questions were totally new. Totally new. No one has said that question paper was easy. Even teacher says, all the faculty says, this time question paper was tough. Then it means what? Is there any reason to panic in exam hall? Is there any reason to panic in exam hall? Are bolna rahi? Are you kidding? Suppose you went to the restaurant and they are serving only one type of food up to everyone. One type of food to everyone. Okay na. Okay. ठीक है ना? Is there any reason to enjoy? Any reason to panic? No. Everyone is getting one type of food. Am I right or not? Same thing in exam hall. Everyone is getting that question paper. There is no set 1, there is no set 2, there is no set 3. That you need to understand. If question number 1 is complicated, question number 1 is complicated for everyone. So be calm. Control your emotions. Take 5-minute break, I will say. Think about after 6 months you are going to become CA. Enjoy that moment right now only. And then start writing. If you are performing, you will get marks. If you are performing, whether the answer is correct or wrong, that is not matter. Because 50% aa jata. But when you are not writing, you are attempting only 70 marks paper, 60 marks paper, and then you are expecting you will get 50 above. So it is joke na. It is joke na. Am I right or not? 70 marks attempt करके बोलते sir I will get 50 marks. It is joke. Then you should be super perfect. Then in 70 marks you should be super perfect. That we know we are not. We all are what? Average. Yes or no? So think about that and then go to exam hall. Exam hall, once again I am saying, that is a place to score marks. Score marks, and that too more than 50. There is no point of scoring. यहाँ पर 90 marks का तो है ही नहीं game. Therefore there is nothing to panic. There is nothing to panic. If one question you don't know, but balance 5 question you know, that is a game. Or 2 question you don't know, but 2 question you can write because you have done that chapter. Achha, any question, just try. I'm just asking you one question. Ki any question I give for lease right now. You have not done any revision right now, na? I have done the revision, but you have not practiced all the questions. Right now, I'll give any question of lease. Will you able to attempt it? Will you able to attempt it 50%? बस हो गया ना, ठीक है. You can attempt now. Why to cry? But you don't know whether it is wrong or correct. Whether you know. Whatever you're writing, whether you know it is wrong or correct. You don't know, na. So why you are thinking that it is wrong? I have never understood that point. If you can attempt, who will decide wrong or correct? That person, na? Who will decide? The person who is evaluating the paper. Right? Whatever you written, have confidence in yourself. And in the moment you think that you are not able to just go through means or आगे नहीं बढ़ पाए, just leave it that moment only. Leave it that moment only. Go to other questions. If you find that no, you are not able to write after that, leave that question that moment. But means out of 10 marks in that question you are getting 2 now. बहुत है. Because there is some question where you score more than what? 90%. Correct now. So that is the game. 2 marks is also very important. That 2 marks is also very important. That you need to understand. कि out of 10 लाना नहीं है. 1 करके 50 आ जाना. Understood? Means any student, just try to understand. और एक चीज बता देता हूँ. Any student who is getting 2, now तो 4 paper ना, 151. And any student who is getting 149. Any difference there? Is there any difference between these two? The difference only 6 months. This is the difference. Knowledge wise there is no difference. It is quite possible he might be more conceptually good or more good in that subject. Quite possible. But difference is what? 6 months. That is the difference. Understood? So that we need to understand that 1 mark is also very important. And therefore don't try to attempt one rule. Try to attain 100 marks paper. Second rule, write even though you don't know. You can write because you know the chapter. You know the chapter. Try it. Try it. Understood? At the end you can try that question. Third point, don't panic. Don't panic. The outcome of this is what? Pass. The outcome of this is pass. Even though you have done 100% preparation, you may fail in exam. Even though you have done 80% preparation, you may pass in exam. Correct? The ratio is like this only. Total depend upon the exam day, how you are performing. Exam day is most important day of your life. So on that day, your ability to perform should be at highest level. And therefore I always say that right now sleep for 4 hours. Normally इसका reverse होता है. I mean right now don't sleep much. 2 months is left now. Sleep for 4 hours. 18 hours पढ़ाई करो. मर नहीं जाओगे 4 घंटा सोने से. मर जाओगे. If you sleep for 4 hours, will you die? Means if I would have been in your position, so I would have slept for 4 hours, I would have studied. But in exam time, sleep for what? 7 hours, 8 hours. But reverse करते हो आप, अभी पूरा सोते हो, एग्जाम में 2 घंटा का स्लीप, 2 hours sleep. You are sleeping only for 2 hours. So the syllabus not completed now. Now बताओ, with that mind, can you perform? A simple question will be what? Blank. Normally you do reverse. You sleep more now and sleep less in exam time, because you will not be able to revise properly na that time. So with that fear you will not sleep. You will not get sleep only. Even though you want to sleep, you will not get sleep. So with 2 hours sleep, 3 hours sleep, you have no habit to sleep for that, because you are not habituated of that. If you are sleeping 8 hours every day, अचानक से if I say sleep for 2 hours, next day you will not be able to perform. You will not be able to perform. I can perform because I have a habit. मैं नहीं भी सो के पढ़ा सकता हूँ आपको, because from last 15 years I am doing that only. Understood? Means I can come, means in the night, sometime I come from out station na, I'll come at night 2:30, 3:30, then 6 I will take the class. Understood? Because I have been habituated of that. But you are not habituated na. Are you habituated? तो इसलिए बोलता है in exam time sleep properly. 6 hours the minimum. 6 hours minimum. And theory paper तो पक्का 6 hours minimum. Otherwise your brain will not work only. Correct. These all points are there which you think to score marks in exam. Correct. Now this is very simple pre-write fair value. Okay, I think you have understood this point. Now the calculation you can do. I think calculation is not difficult. So I think you can calculate basic earning per share for previous year and current year. For this, after this, means in previous year you will take 9790, ki you will take 40210. 9790 for how many months? 12 months. Okay, sir. Then issue number 7, share issued in business combination. However, no question of this has been given under IND AS 33, but one question has been given in business combination chapter with the question calculate EPS. So on that particular point, I can say this type of question can be asked. I will take one question to explain how to calculate EPS for business combination. Correct. So A Limited absorbed B Limited on 30th June 2017. Number of shares of A Limited, number of shares of B Limited. A Limited issued 4 lakh equity share to the shareholders of B Limited as a part of business combination. Calculate basic earning per share. Business combination is not a reverse acquisition. Business combination is a reverse acquisition. With one question I am explaining both. Information of profit is given A Limited, B Limited up to 30th June 2017. Up to means what? On the date of acquisition, and then from 30th June to 31st March 25 lakh means what actually happened. Let's see. This is what A Limited. This is 30th June 2017. And this is after the date of acquisition. This is B Limited. Yeah, B Limited will be liquidated यहाँ पर on 30th June 2017. So what was the profit before acquisition? 5 lakh and 10 lakh. It is 5 lakh and 10 lakh. And what is the profit after acquisition? It is what? 25 lakh. So can you say this 25 lakh is A plus B's profit? This is only A's profit. This is only B's profit. Now what is the number of shares outstanding at the beginning? A Limited how much? 1 lakh. B Limited how much? So 1 lakh and 2 lakh. And can you say A Limited has issued how many equity shares on the date of acquisition? They have issued 4 lakh. So this is 4 lakh equity shares of which company? A Limited. This is 2 lakh shares of which company? B Limited. Can you say this 4 lakh equity shares is nothing but equal to, means the fair value of this 4 lakh equity share will be equal to what? Fair value of 2 lakh equity shares, means A Limited will issue in exchange of what? Equity shares of B Limited, means 2 lakh equity shares of B Limited will be equal to what? 4 lakh equity shares of A Limited. So this 4 lakh is equivalent number of equity shares of B Limited. बोलो yes or no? Equivalent number of equity shares of B Limited. Understood? Now When it is not a reverse acquisition, then simple acquisition, then whatever you are doing from A's point of view. So what will be the basic earning per share? Basic earning per share when it is not a reverse acquisition. So of course you will not consider this. You will consider 5 lakh plus 25 lakh. That become how much? 30 lakh. Divided by number of shares at the beginning. How much? 1 lakh. Into what? 12 by 12. Then how many shares issued? 4 lakh. From the date of acquisition means 9 by 12. This become when it is not a reverse acquisition. This is the very simple. Anyone can do it. Okay. But if it is a reverse acquisition, now whatever we are doing from whose point of view? B's point of view. Means for accounting acquirer. So legal acquirer is not an accounting acquirer. So legal acquirer was A. So now accounting acquirer will be what? B. So now whatever you are doing from B's point of view. So what you will take which profit? So we'll take this profit. We'll take this profit now from B's point of view. B has taken over what? A. B has taken over A. So B's consolidated profit will be 10 lakh plus 25 lakh. Correct. Now, these shares are outstanding from the beginning. But for this year, how many shares has been given? Means 2 lakh now become what? 4 lakh. 2 lakh now become 4 lakh. So 4 lakh will be deemed to be issued from the beginning. 4 lakh will be deemed to be issued from the beginning. So we'll do 4 lakh into what? 12 by 12, and this will be deemed to be issued from the date of acquisition. So 1 lakh will be deemed to be issued from the date of acquisition. Understood? This question has been given in business combination chapter in one of the questions. So because of that point, I am assuming that this type of question can be asked in exam. However, in IND AS 33 they have not given that type of question. Chalega. So we'll take what? 1 lakh into 9 by 12. Have you understood this point? Not able to understand? 1 second. First, when it is not a reverse acquisition, have you understood or not? Now, when it is reverse acquisition, whatever you are doing from B's point of view or A's point of view? B's point of view. So, अब imagine करो कि if B's have acquired A, so what will be the earning? It will be what? 10 lakh plus 25 lakh, na? So 10 lakh plus 25 earning you have understood. So we'll take the number of shares from B's point of view to A's point of view. So what was the initial number of shares? But that has been now exchanged by how many shares? So now 2 lakh equity shares of B Limited now become 4 lakh equity shares of A Limited. If the 2 lakh is outstanding from the beginning, so 4 lakh is also outstanding from the beginning only. Therefore, weight of 4 lakh will be what? 12 by 12. Understood? And who is the accounting acquiry? How many shares of accounting acquiry? So that will be deemed to be issued from the date of acquisition. That will be deemed to be issued from the date of acquisition. And therefore, do 1 lakh into 9 by 12. Understood? Have you understood? Correct. And can I say in this case, we need to also restate previous year EPS also. Previous year EPS will be restated. Means that will be the earning of B Limited for previous year. Earning of B Limited previous year, that information is not given in that question. So we will take earning of B Limited previous year divided by what? Batao. Divided by this will be assumed to be outstanding from the beginning of previous year. So 4 lakh into 12 by 12. This will be restated earning per share of B Limited. Understood? Correct. Understood? Correct. That is given by way of formula. Correct. However, from the point of view of accounting acquirer, we'll take consolidated earning of accounting acquirer divided by number of shares issued to the owner of accounting acquirer from the beginning of the year plus number of shares held or issued to the owner of accounting acquiry from the date of acquisition. And just write down previous year EPS will be also restated in case of reverse acquisition. In case of reverse acquisition. Chalega? Yes, sir. Then coming to diluted earning per share. So basic earning per share done. Basic earning per share done. Now diluted earning per share is what? Whenever there are potential equity share, we need to calculate diluted earning per share. Potential equity shares are what? Potential equity shares are financial instrument or any other contract which may entitle equity shares to the holder. Which may means what? Either compulsory or optionally. Means it can be either financial instrument contract or any other contract. Any other contract means it can be contingent consideration in case of business combination also. It can be contingent consideration in case of business combination also. Correct? Yes, sir. Examples are convertible debenture, convertible preference shares, any options including ESOP, share warrant. Formula become what? Adjusted numerator for the effect of dilutive potential equity shares. Adjusted denominator for the effect of what? Dilutive potential equity shares. How to adjust that only we need to understand. How to adjust we need to understand. Means can you say now we need to calculate a earning per share on the assumption that if potential equity shares are converted into equity share during the year only, correct? Now then what will be the effect on EPS? Then what will be the effect on EPS? I will say basically this diluted is nothing but future earning per share. Future earning per share. Expected earning per share you can say. Correct. Example, let me take one example. Equity shares outstanding at the beginning is how much? On 1/4/2017, 6% debentures were issued at rupees 10 lakh which will be converted into 1 lakh equity shares of rupees 10 each after 5 years. Market rate of interest of similar debenture without conversion right is how much? 10%. Net profit attributable to equity shareholders how much? 10 lakh. Tax rate 30%. Calculate basic and diluted earning per share. So basic is very simple because all the points are given. But the basic will be how much? But the earning how much given? What is the number of ordinary shares outstanding? 1 lakh, no? So this is 10 rupees. Basic earning per share is 10. Now coming to what? Diluted earning per share. But if convertible debentures are converted into equity shares, so they are not entitled to interest. So profit will increase by what? Interest. Means numerator will increase by what? So we'll do plus interest, but how much? And then if convertible debentures are converted into equity shares, so they will get some additional equity shares. So number of equity shares will also increase to 1 lakh. So they are getting how many equity shares? How many equity shares? So it will be converted into how many equity shares? 1 lakh equity shares. So because this is outstanding from the beginning, so this will be also outstanding from the beginning only. So we'll take what? 1 lakh into 12 by 12. Only we need to find out what? Interest. But what will be the amount of interest? What will be the amount of interest? अरे बोलो. What will be the amount of interest first? Are I am saying calculate. You are not calculating or discussing. 42,000. How you calculated? How you calculated? 6% of 10 lakh is equal to how much? 6,000 into 0.70. It is coming what? 42,000. Everyone have done this? If anyone want to give some other answer? Means one thing to everyone have forgotten financial instrument chapter. But the interest expense will be calculated by applying contractual rate of interest. Whether we'll take contractual rate of interest? Are you able to understand what I am saying? अरे बोलना रे. Will take contractual rate of interest. Will you take contractual rate of interest? Bolo yes या no. Then I'll ask next question. So this is correct or wrong? Wrong. Now second answer is what? 70,000. What you have done? 10 lakh into 10% means 1 lakh. 1 lakh into 70%. क्या है बताओ? क्या है? Why we have done financial instrument chapter? Why we have done financial instrument chapter? Will you apply market rate of interest on the total amount? This is convertible debenture. This is a compound financial instrument. First, you need to split it into two parts. Compound financial instrument. Compound financial instrument. Whether I will inform you that. Whether I should inform you that now? Correct? चलो ठीक है. Okay, चलता है. Okay. So can you see it is a compound financial instrument? So interest will be calculated as per Ind AS 32 and Ind AS 109. So first split करना. So you need to find out fair value of liability component. So how to find out fair value liability component? बताओ. What is the proceed given? Proceed is equal to what? 10 lakh. Then you'll find out fair value of liability component. बताओ what is the interest component? What is the interest component? 60,000. Payable for how many year? Payable for how many year? 5 years. So we need to find out present value annuity factor at what rate of interest? 10%. For how many year? So 10% for 5 years. Can you give me annuity factor? 60,000 into what? You have given the amount only. Amount is what? बता दो. 252 740. So how this came? क्या बोलना बताओ? What I should say? इसलिए what I say देखो, one thing more I will say to you. Everyone listen. देखो, actually you have forgotten how to study. You don't know how to study also. With articleship you become auditor. Actually you need to change थोड़ा सा. If you want to pass, you need to react like a student. You need to behave like a student. But actually we don't think ourselves as student now. Believe me, this is also one point. When anyone is asking someone now, write and do. When you write, then only you think. Otherwise everything is blank. देखो, I am writing everything. I am writing everything because I behave myself as student only in classroom. When I come to classroom now, I act like a student. If I will act like teacher now, you will not understand anything. Should I act like teacher? देखो पढ़ाता हूँ, teacher बन के पढ़ाऊँ. You will not understand anything. अच्छा, whether I am writing for you or for myself, for both. For both. But I think no one is writing यहाँ पर. You are only taking amount from this projector and start calculating. अच्छा, if I can write, you can also write ना. Now I am writing 10%. You think you are also understood 10%, but you are taking what 6% because that is not in your mind. Blank हो गया. Avoid small mistake. I am saying this is the last day. Last day. FR is very easy. And this is not only he is doing mistake. You all will do mistake in exam. You know 10%, but पता नहीं 6% कहाँ से आएगा because of lack of concentration. Because of lack of concentration. Got this? First, don't jump. Don't jump. Don't start doing calculation directly. Write everything and then calculate. Write everything and then when you are writing, then only you are thinking. Okay, sir. I hate this type of student. Believe me. खराब लग रहा लगने दो. But I hate this type of student who is doing calculation mistake. I hate. If you are doing conceptual mistake, अच्छा है, we can rectify that. But how can I improve in your calculation? Are you able to understand? For that, higher level of concentration required. And if you are not passed because of this reason, what circumstances? So if you don't know any question, you can't write na. But if you know and you are not getting marks, कितना तकलीफ है बताओ, painful. Got this point? Please be careful. Next time, don't repeat in class also. ठीक है, बताओ. What is the correct answer? 227, 447. I am assuming it is correct, huh? Chalo. Now, can the principal component will also come? Principal component how much? How much? Amount is what? Amount. Principal component. अरे बोलो. अच्छा, you don't know question. लो question लो. Principal component how much? 0. How? Very good. It is compulsory convertible. It is given not. Which will be converted means it become what? Compulsory convertible debenture. But if it is optionally convertible, then it will be classified as liability initially. Then principal component will come. Already we discussed this point in compound financial instrument topic. Okay, correct. It is optionally compulsory convertible. Therefore, it will be nil because it will be equity component. It will not be liability component. The total liability becomes this amount. What is the total of this liability? 2,27,447 into what? To find out interest. Into what? EIR. What is the EIR? What is the EIR given the question? Whether any transaction cost is there? No. So EIR will be equal to market rate of interest. Correct? Into 10%. So it is become 22744. This become interest expense. Now write down 22744 into what? 70%. That is net of tax. Net of tax, so I think no explanation required. Correct? Understood this point? So this become what? Your adjusted numerator and adjusted denominator. Have you understood this point? Correct? Have you understood this point? Now from examination point of view, this too you have understood. Now suppose this type of questions come. Agar this question came and they have not given market rate of interest, because it is this type of question has been given ICAI study material. Ki by mistake in exam, I will say that is by mistake only. Ki they have not given market rate of interest, but can you split? I am asking something. Suppose same question came and they have not given market rate of interest. Can you calculate market rate of interest? Can you go to market in exam? No. So if market rate of interest is not given, then we'll assume that we can't split and we'll apply contractual rate of interest only from exam point of view, because this type of question has been given under ICAI study material and they have also done in that way. That is totally bakwas. I will say by mistake what is not given? Market rate of interest not given. So ignore that splitting part, then apply 6% on what? 10 lakh. And write down one note, due to lack of information we can't split, and therefore we have not applied Ind AS 32 requirement. Understood? Have you understood this point? What is not given? Market rate of interest is not given, then we can't split, then apply contractual rate of interest on nominal amount, on nominal amount. Chalega? Understood? Yes sir. Done. This understood. So guys, with this question I have just explained how to do adjustment in numerator and then denominator. Can you see if there is a convertible preference here, then we'll increase numerator by preference dividend. If there is a convertible preference here, then we'll increase numerator by preference dividend and increase denominator by number of potential equity shares, weighted number of potential equity shares. If there is an ESOP, so the numerator will increase by what? Whether ESOP are entitled to any income? No. So numerator will be increased by nil and denominator with potential equity share. If there is share warrant, so numerator will increase by nil because share warrant also not entitled to any income. Only number of shares will increase. So it will depend upon what type of potential equity share you have been given in exam. Understood what I am saying? So I am just explaining from exam point of view. Normally they give this type: convertible debentures, convertible preference shares, options and share warrant. Normally these four type will be given. Okay. So numerator, denominator, correct. Okay, numerator it will be interest net of tax. Bolna rahi? Correct. Understood. By applying what? EIR. Interest will be calculated by applying EIR. On which component? On liability component. Understood. And denominator with what? Potential equity shares, with the number of potential equity shares. Number of potential equity shares. Convertible preference share, preference dividend. The amount of preference dividend. Amount of preference dividend. And this will be what? Potential equity shares. Will you do net of tax? Will you do net of tax? No. Because preference dividend is debited to what? SOPL or retained earning? Retained earning. Are you able to understand what I am saying? Are you able to understand what I am saying? Have you understood this point? Correct. Now, any option, this will be nil with potential equity shares. This will be also nil. This will be potential equity shares. Have you understood this point? Correct. Any doubt? Means my discussion is restriction from examination point of view, because I know what question they give. So if you have any doubt in your mind, if you will ask that point, then only I will explain. Otherwise, ignore that, because I know that the point they will not ask in exam. Okay? Have you understood this point? Chalega? Understood? Yes, sir. Now coming to next point, dilutive and anti-dilutive potential equity share. This is important from exam point of view. So what Ind AS 33 says that all potential equity shares are not dilutive. All potential equity shares are not dilutive. There are some potential equity shares which are anti-dilutive. So anti-dilutive potential equity share will not be considered for calculation of what? Diluted earning per share. So only dilutive potential equity share will be considered for calculation of diluted earning per share. So when it becomes dilutive, when it is anti-dilutive, that we need to understand. So what they want to say, if potential ordinary shares shall be treated as dilutive when and only when their conversion to ordinary shares would decrease earning per share from continuing operation. From which operation? Continuing operation. Or increase loss per share from continuing operation. So what is the benchmark profit or loss from continuing operation, to find out whether potential equity shares are dilutive or anti-dilutive. Similarly, potential equity shares are anti-dilutive when their conversion to equity shares would increase earning per share from continuing operation or decrease loss per share from continuing operation. So any anti-dilutive potential equity share will not be considered for calculation of diluted earning per share. For that we have taken one question: profit from continuing operation, loss from discontinued operation, number of equity shares outstanding, number of potential equity shares outstanding, calculate basic and diluted earning per share. So can you say first we need to perform test for dilution. But for that, which profit is relevant? Okay, this profit is relevant. So first we'll do 5 lakh divide by 10,000. This is how much? 50. So this is the EPS without conversion. Then we find out EPS with conversion. So 5 lakh divide by what? 10,000 plus what is the potential? 2,000. This become how much? 40, 41.67. So can I, it is decreasing, decreasing. So therefore can I say potential equity shares are dilutive and therefore will be considered for calculation of diluted earning per share. Understood? Have you understood? So now can I say we'll take total profit into consideration. Total profit into consideration. So this become what? 10 lakh negative. 10 lakh negative. Divide by what? 10,000. This become basic earning per share 100, and 10 lakh negative divide by what? 12,000. This is how much? 83.33 negative. So this become diluted earning per share. So first you need to perform test, and when the test is satisfied, then only that potential equity share will be considered for calculation of diluted earning per share. Now whenever there is a profit from continuing and discontinued operation, what IND 33 says that you should disclose EPS from continuing operation, EPS from discontinued operation, and EPS from total operation. EPS from total operation. It means you need to calculate basic and diluted earning per share from continuing, discontinued, and total operation. So this is basic earning per share for total operation, but you need to also calculate for continuing and discontinued operation. That we can do. Chalega. Similarly, one more example: loss from continuing operation, profit from discontinued operation. If this information is given, so batao, we'll take only 15 lakh loss from discontinuing operation divide by what? 10,000. This is coming how much? 150 negative. Now we'll take 15 lakh divide by what? 12,000. It is coming how much? 125 negative. Now it means you can see loss per share decreases. So it is favorable, unfavorable. It is favorable. Favorable means anti-dilutive, and therefore this potential equity share will not be considered for calculation of diluted earning per share. In this case, can I say your diluted earning, basic earning per share will be 10 lakh negative divide by 10,000, that is 100, and your basic earning per share will be also what? 10 lakh divide by what? 10,000 only. 10,000 only, because 2,000 is not considered for calculation of diluted earning per share. So this will be equal to what? Basic earning per share. Understood? Acha, 15 lakhs. No, total I have taken now. Total. I am calculating from total operations point of view. You can do from continuing and discontinued operation point of view also. Understood? Have you understood this point? This is only testing. This is only testing. So this we are performing for testing to find out whether they are dilutive or anti-dilutive. Dilutive or anti-dilutive. Understood? Correct. Next point is options and warrant. Now what they want to say, any options. So right now options means what? There are many types of options: call option, put option, purchase option, return option. So right now when I say option, so this is actually a return call option. What do you mean by return call option? There is an obligation to sell, means obligation to issue equity shares. Correct now? It means entity has an obligation to issue equity shares. Am I right? Means whenever in exam they say options in this chapter, whenever in exam they say options in this chapter and nothing has been given, we'll assume it is what? Return call options. We need to take this assumption only. Otherwise doubt will be there, na? Whether it is return options or it is purchase option whether it is call option, whether it is put option. Are you getting what I am saying? So whenever in this chapter they say options has been granted and nothing has been given, we'll assume it is what? Return call option. Okay, return call option. One of the example is ESOP also. Okay, ESOP is nothing but return call option. So this will be including ESOP. Including ESOP. So when I am saying ESOP, so in ESOP who has a right? Employee. Who has an obligation? Entity. And obligation is to issue equity shares when the conditions are satisfied. Correct. So can you see ESOP including ESOP? Now what they are saying, these options will be dilutive if they are in the money. In the money. But in the money will be from the point of view of writer or holder? From the point of holder. It means, can you say market price is more than what? Exercise price. Market price is more than exercise price. But market price, so abhi we don't know actual market price on the date of exercise. So this will be average market price is more than what? Average market price of current year more than what? Exercise price. So they will give you average market price, they will give you exercise price, so that become in the money. In the money will be dilutive. So it will be anti-dilutive when they are not, means out of money, you can say out of money. Understood? Then it will not be considered. So in this case it will be considered. Now whenever it is in the money, so they say ki options will be divided in two parts. Options will be divided in two parts. One is number of shares which will be issued at fair value, and number of shares which will be issued at nil consideration. For example, 1 lakh options was granted at an exercise price of 20 and average market price is 50. But the number of shares which will be issued at fair value will be what? 1 lakh into 20 divided by 50. That is how much? 20,000. Correct? Got this point? So number of shares which will be issued at nil value will be what? 1 lakh minus 20,000. That is equal to what? 80,000. So this will be dilutive component. This will be dilutive component, and this will be considered for calculation of what? Diluted earning per share. Because can you say any shares which are issuing at nil consideration, that will dilute your earning. Any shares which will be issued at fair value, that will never dilute your earning. Understood? So this will be dilutive component, and this will be considered for calculation of what? Diluted earning per share. Chalega? Understood this point? Have you understood this point? Chalega. Let me take one question. What they have given? A Limited has 6 lakh equity shares. On 1st April 2007, the company earned a profit of 15 lakh. The average fair value is 25. The company has given share option to its employee 1 lakh equity shares at an option price of 15. Calculate basic and diluted earning per share. So can you give me first dilutive component? First, so it is in the money. You can see market price average fair value is more than what? Exercise price. In the money, so that will be considered for calculation of what? Diluted earning per share. It is dilutive. Now we need to find out dilutive component. What will be dilutive component? How much? It is 1 lakh into what? 15 divided by 25. How much? 60,000. So 1 lakh minus 60, how much? So 40,000 become what? Dilutive component. Or we can say in this way, this is nothing but 1 lakh into 25 minus 15 divided by 25. Directly we can calculate. Chalega. So this become dilutive component. So your basic earning per share will be what? Basic earning per share. What is the profit given? Profit given 15 lakh and number of ordinary shares 6 lakh. So 15 lakh divided by 6 lakh is equal to 2.5. So diluted earning per share will be what? Batao? It will be 15 lakh plus nil, because they are not entitled to any income. And then 6 lakh plus what? 40,000. If nothing is given, always assume outstanding from the beginning only. If they have not given the date of granting the option, so always assume it is granted at the beginning of the year. Understood? It will be 12 by 12, and this become what? Your diluted earning per 2.34. Understood? Chalega? Understood? The options also you have understood. Next point. Next point is what? Contingently issuable shares. Contingently issuable shares means what? Any equity share which will be issued in future, and right now that is contingent. The best example is contingent consideration in case of business combination which has been classified as equity, means for which equity shares will be granted, either which means not classified as equity, either variable number of equity shares or fixed number of equity shares. So that become what? Contingently issuable equity shares. So the point is that it will be included or it will not be included in diluted earning per share. So what Ind AS 33 says that if there are some contingently issuable equity shares and if the condition is already satisfied during the year, then of course it will be included in calculation of what? Diluted earning per share. From which date it will be included? Either from the beginning of the year or from the date of contingent share agreement, whichever is later. Understood? So it will be included from which date? Either from the beginning of the year or from the date of contingent share agreement, whichever is later. Understood? Means suppose this is the beginning of the year and you have done some contingent share agreement यहाँ पर, business combination यहाँ पर हुआ, so of course it will be included from this date only. Got this point? From this date. But suppose previous year there was some business combination and you are calculating EPS for this year, so this will be from the entire 12 month only. The beginning of the year is later now, whichever is later. Now if conditions are not satisfied during the year, and what they are saying, if the end of the period is the end of the contingent share agreement, means now the condition will not be satisfied. Understood? The agreement is now lapsed, then it will be withdrawn and now it will not be included for calculation of diluted earning per share. Will not be included in the calculation of diluted earning per share. But sometime what happened, if the condition is not satisfied but the end of the contingent share agreement is not the end of the period is not the end of the contingent share agreement. Quite possible. The condition need to be satisfied in 5 years and that is the first year only. So first year we don't know whether condition will be satisfied or will not be satisfied. So whether it will be included. Okay. This type of question they have not given in the ICAI study material, but what they want to say, then we'll assume that end of the period is the end of the contingent share agreement period. And if that is the case, whether the shares will be issued, means whether the condition is satisfied at that point of time. If satisfied, then included. If not satisfied, will not be included. However, this is important from exam point of view. Understood? Only one question of this nature has been given that you can do from ICAI study matter, but I hope you have understood contingent share agreement. Have you understood this point? Correct. Then come to the next point. Contract that will be settled either in ordinary shares or cash, means it is nothing but optionally convertible financial instrument. Optionally convertible. Now if there is a contract that will be settled either in ordinary shares or cash, now one doubt will come whether equity shares will be issued or will not be issued in future, because that is right now contingent. Now we are not discussing accounting. Accounting we have done as per what? Ind AS 32. So I am not discussing accounting right now. We are doing that for EPS, what will be included, what will not be included. So what they are saying, for the calculation EPS, there can be two situations, whether option is with entity or option is with holder. If the option is with entity, for EPS calculation, always assume it will be settled in equity shares. For EPS calculation, I am saying, for accounting, it is based on the intention of management. Are you getting what I am saying? But for if the option is with entity, it will be presumed that contract will be settled in ordinary shares. So number of shares will increase, so of course that will decrease what? Earning per share. Understood? But if the option is with holder, so what they are saying, then you need to review both the options. Means entity should verify the effect of both on calculation of EPS. Means just cross check. Situation number 1, if it is redeeming cash, then what is the effect on diluted earning per share? Sorry, what is the effect on earning per share? If it is converted, then what is the effect on earning per share? The most dilutive earning per share will be the diluted earning per share. Correct? The effect where the EPS were more dilutive will be considered for calculation of diluted earning per share. However, no question of this nature has been given. Only one question of this nature has been given, that is important from exam point of view. So in that case, you can do it. It will be presumed that what? Equity, it will be settled in equity shares. It will be settled in equity shares. Understood? Correct? Yes, sir. Then purchase option. Now when I am saying purchase option, can I say purchase option means entity is the holder? Entity is holder. Correct. Now purchase option can be purchase call option or purchase put option. Can I say entity will access only when it is favorable? Whenever it is favorable, so but it will be dilutive or anti-dilutive? Anti-dilutive. Therefore, do not consider for what? Diluted earning per share. The purchase call option or purchase put option will be always what? Anti-dilutive, and therefore ignore for calculation of diluted earning per share. But return put option, right now when I was doing that ESOP, that was return call option. Now this become return put option. So return put option means entity has an obligation to buy. Buy what? Their own equity shares. Their own equity share means it will result in buyback. It will result in buyback of equity share. So can I say it will be also dilutive when it is in the money? In the money from the point of view of holder. So when put option will be in the money? When the average market price is less than what? Exercise price. So this will be dilutive when it is in the money. In the money means what? Average market price is less than exercise price. Understood? However, for this, no question of this nature has been given in ICAI study material. So from my point of view, they will not go to this level. They will not go to this level. But if you want, I can explain. The contracts such as return put option are reflected in the calculation of diluted earning per share if the effect is dilutive. If this contract are in the money during the period, that is exercise or settlement price is more than what? Average market price. The potential dilutive effect on the earning per share shall be calculated as follows. But I have seen one question of MCQ was given this nature. MCQ question was based on this. Means MCQ में तो कुछ भी पूछ रहा है. They have not given any practical question of this nature, but one question I have seen ICAI question was of this nature. But if you have understood concept, you can write na in the money, everything you have understood. Correct. Now what they want to say, just try to understand. Similar effect will do. I'll just take one example so that you can understand. Suppose profit is 10 lakh, ordinary shares is 1 lakh, and there is a return put option 1 lakh. Exercise price is 100 and average market price is 80, 75. Understood? So basic earning per share is how much? 10 lakh divided by 1 lakh is equal to 10. Now we are here to calculate diluted earning per share. So of course in the money. In the money means dilutive. So this 1 lakh will be divided in two parts. Understood? कि number of, we'll find out number of shares which will be bought back at average market price. Number of shares which will be bought back at average market price. So that will be what? 1 lakh into 100 divided by 75. How much? 80 कर दो. 80 is how much? चलो 1,33,000 कितना आ रहा है? 1,33,000. It means the difference is what? 33,333. So this will be number of shares which is deemed to be issued at nil consideration. So it will be assumed that this much shares has been issued at, will be issued in future at what? Nil consideration. So this become dilutive component. This become dilutive component. So this will be deemed to be issued in future at which consideration? Nil consideration. That become dilutive component, and that will be considered for calculation of diluted earning per share. So what will be answer? It will be 10 lakh plus nil 1 lakh plus 33,333. Outstanding from the beginning only. This will become your diluted earning per share. Understood? Done. The last point of this chapter. Last point. Determining whether potential ordinary shares are dilutive or anti-dilutive. So of course we have done this, but there may be a situation when they have given more than one potential equity share. If they have given more than one potential equity share, how to find out dilutive and anti-dilutive? For that they have given some steps. These steps I will explain with one question. The similar question have been asked in exam. Similar question have been asked in exam for 10 marks. So what they have given, how to apply this step I am explaining. Profit from continuing operation attributable to parent entity, it is 1 crore 64 lakh. Less dividend on preference shares 64 lakh. Profit from continuing operation attributable to ordinary equity holder parent entity 1 crore. Loss from DCO means discontinued operation 40 lakh. Profit attributable 60 lakh. Ordinary shares outstanding 2 lakh. 20 lakh. Potential ordinary shares options 1 lakh with an exercise price of 60. And in this question they is submitting that on average fair value is what? 75. Average fair value is 75. Whenever they have given options, they will always give what? Average fair value. If not given, this question is not correct. They will give convertible preference shares of convertible preference share 8 lakh shares with a par value of 100 entitled to a cumulative share dividend of rupees 8 per share. Each preference shares is convertible to 2 ordinary shares. My question to you is convertible. If nothing is given in this chapter, whether you will consider this as equity or financial liability or compound financial instrument for this chapter. Equity. So this will be always considered as what? Equity. But this is convertible. Convertible, it will become potential equity shares also. Okay. Now 5% convertible bond, nominal amount rupees 10 crore, each rupees 1000 bond is convertible to 20 ordinary shares. There is no amortization of premium or discount affecting the determination of interest expense. Tax rate 40%. My question to you are, for this chapter, if nothing is given, they have given convertible bond, you will consider this as equity, liability or compound financial instrument. It is compound financial instrument, no doubt. Can you assume this is equity? Can you assume this is equity? No. It is a compound financial instrument. Means now your understanding is correct. Whatever you are saying, that is correct. But what is not given? And the same question was asked in exam. When this question was asked in exam, now believe me, that question was not in ICAI study material. This question I have taken from ICAI resource, and same to same question was asked in exam. Now to it become an ICAI question now. Now it has been asked in exam, so everyone is teaching this question. But when it was not in ICAI study material, I used to teach this question because I have taken this question from ICAI resource without any changes. Because I believe ICAI will take question from there only. Whenever they want to create a new question, they will go to their resource and they will take that question now. Yes or no? So that question is now already asked with some modification, but in exam question they have also not given what? Market rate of interest. What assumption I have said? Whether you will do splitting. Splitting can't be done. Can you assume market rate of interest? Don't assume, because we can't go to market. So what you will do? From exam point of view, calculate interest on which amount? On this entire amount by taking which rate of interest? 5%. 100% bakwas. But we need to follow what? ICAI solution. Correct? 100% bakwas means, suppose in exam they have given same question with market rate of interest. Now you need to split and find out interest expense by calculating on liability component by using EIR. ER means, suppose they have given transaction cost also, ER also. I hope you are understanding. Correct? That type of question also has been asked in exam. ऐसा नहीं कि they have not asked that type of question. That type of question is also given in ICS study material. But if not given, will not fight with the question. If not given, they will not fight with the question. Understood this point? Now, in this case, how to perform basic and diluted earning per share. So I will do this entire solution. First, what they say, he calculate. I mean, right now we are doing how to determine dilutive and anti-dilutive potential equity share. Once you have understood that, then calculation is very easy. So first we'll calculate incremental earning per share. Incremental earning per share. Incremental earning per share means increase in numerator, increase in denominator due to the effect of potential equity share. So you need to find out increase in numerator, increase in denominator, and this will be incremental EPS. So first you will take option, but the increase in numerator will be nil. Options will not affect. Whether options are entitled to any income? No, so nil. Denominator will be how much? Increase in denominator will be one number of potential equity shares. So what is given? This 1 lakh shares, 1 lakh option with an exercise price of 60. Average fair value how much? 75. So you need to find out dilutive component. Dilutive component will be what? 75 minus 16 how much? 15. So it will be 1 lakh into 15 divided by 75 is equal to 20,000. So what is the incremental EPS? Nil. Nil na. 0 by anything is 0 na. Okay. Then find out convertible preference shares. But what is the increase in numerator? Preference dividend. 8 lakh into 8 means 64 lakh. 64 lakh. And then denominator. But potential equity share. Each preference shares are converted into 2. So 8 lakh into 2 how much? 16 lakh. So what is incremental EPS? 4. Then convertible bond. But the increase in numerator will be what? 5% on? Only from this question point of view. Are you getting? If market rate of interest given, first find out liability component, then apply EIR. Correct? So 10 crore into 5% how much? But net of tax means 60%. How much it is coming? 30 lakh. Very good. Net of tax na. And then increase in denominator. So what they have given? The rupees 1000 bond will be converted to a 20. So 10 crore divided by 1000 divided by 20. Sorry, multiply by 20. How much? It is 20 lakh. Very good. But how much? 1.5. So this become incremental EPS. First step you understood? First step. Now second step is what? Now we'll rank them in the order of most dilutive to least dilutive. We'll rank them. So but which one is more dilutive? Most dilutive. Means which will decrease the earning per share more. Huh? Nalayak. More does not mean higher number. I am saying which one is more dilutive. Means it is increasing now. It is incremental. This will actually increase what? This will have favorable effect ना. अरे बोलना रे. So ranking is more dilutive to, most dilutive to, least dilutive. So this is rank 1, this is rank 2, this is rank 3. Understood? Correct. This is the second step. First step you understood, second step you understood, third step. Now we'll do testing for dilution. So we'll find out, write down numerator, denominator and earning per share from which operation बताओ? Continuing, discontinued की total operation? Continuing operation. So we want earning per share from continuing operation. So first write down as reported. As reported means as given the question. So as given the question बताओ, what is the profit or loss from continuing operation? It is what? 1 crore. After deducting preference dividend only will take. So 1 crore. 1 crore. So this become our benchmark profit for testing na. And denominator will be ordinary shares. Ordinary shares given how much batao? It is 20 lakh. 20 lakh. 20 lakh. How much? It is 5. Then first we'll give the effect of option. First we'll give the effect of option. So but the option, what is the effect in numerator? Denominator. This become what? 1 crore, 20 lakh, 20,000. What is the EPS? 4 point. But the anti-dilutive or dilutive? It is dilutive. So this will be considered. Then we'll give the effect of what? Convertible bond. What is the increase in numerator? Increase in denominator. So this become what? 1 crore. And this become what? 40 lakh, 20,000. How much? This is also what? Dilutive. Understood? Then convertible preference shares, but the effect in numerator. Effect in denominator. Total 1 crore. This is how much? 56 lakh. Now how much? 3.45. Oh ho. Increases. This become anti-dilutive. Therefore, this will not be considered for calculation of what? Diluted earning per share. Only options and convertible bond will be considered for calculation of what? Diluted earning per share. Understood the testing? Calculation you can do it. Means ignore the impact of this for diluted earning per share. Chalega. Similar question is given ICAI study matter. Now you will be able to understand. Got this point? With this, the chapter is closed from my point of view. Of course, there are some good questions given ICAI study matter. Means I will say there are 6 to 7 good questions. Good question means which require thoda sa practice. Balance all questions are very easy. Means if you count there are 6 to 7 good questions, do that question because similar question can be asked. And with solution you will be able to understand. Means a CA final student can understand any solution, even though they are not conceptually good. That I know. Correct now. With solution you will identify what is the concept. So only practice that 6 to 7 questions. Normally I have seen that from this chapter they are asking similar type of question. Chalega. So chapter over from my point of view. Okay. I will like to take one small Ind AS 10. Actually that was not given in the curriculum only. ठीक है ना, तो पढ़ा देते हैं. Ind AS 10. Very simple, nothing to say much about this. You all know about event after reporting date. कि any event which are favorable or unfavorable and which occur between reporting date and the date when the financial statement are approved is known as what? Event occurring after reporting date. Now when I say which occur between reporting date and the date when the financial statement are approved, so approved by whom? Approved by the board of directors. Means approval of shareholders, approval of supervisory board is not at all relevant. Means in exam they may give you this type of question ki date of approval of management is this and after that shareholders approval required. So that is not at all relevant for this chapter. So it means you need to just find out when board of director has approved the financial statement. Now my question to you all, ki once it is approved by the management, can you amend? Once it is approved by the management, can you amend the financial statement? Can you do some changes in the financial statement? Normally no. But sometimes with some special power, if some special power is given to the owner or any other officer of the company, correct now, then it can be reopened if that special power has been given. And suppose due to that special power, it is quite possible some fraud was investigated and the books of account were reopened in this date. Suppose books of account was reopened and then again it was approved on this date. So which will be the date of approval? A or B? Then it will be B. So because of that special power, if the books of account has been reopened and financial statement is once again prepared by adjusting that, so it means that the date of approval will be this, not this. This type of question can be asked in MCQs. Chalega? Yes sir. Now in this chapter there are two type of event: adjusting event, non-adjusting event. Adjusting event are those events which provide evidence of the condition existing on the reporting day, which provide evidence. Because if you read AS4, now AS4 has given which provide further evidence, and because of that reason AS4 and IND AS10 is थोड़ा सा difference है. यहाँ पर further evidence नहीं लिखा, which provide evidence for the first time. So normally students are confused. With this particular point. So the word is what? Which provide evidence, not further evidence. If you read AS4 is given what? Which provide further evidence. But IND AS10 has given which provide evidence. So if you got evidence for the first time, then also it become what? Adjusting event. It become adjusting event, correct? So if it is an adjusting event, so of course this will be adjusted to the financial statement, correct? If it is non-adjusting event, means what? Which arises, the condition arises after the reporting date. Condition arises after the reporting date means relate to any condition arising after reporting date. No adjustment required, only disclosures are required if the amount is material. Disclosures are required if the amount is material, correct? Examples are given for adjusting event. Normally in exam they ask this type of question only. Normally is the settlement of court case after reporting period. The settlement of any court case after reporting date, adjusting event. The bankruptcy of a customer that occur after reporting period, some debtor become insolvent after reporting date. The sale of inventory after reporting period may give an evidence about the NRB. So any subsequent sale will give evidence about NRB. So NRB require changes. Determination after reporting period of the amount of profit sharing or bonus adjustment. Normally profit determined after balance sheet date only. So that bonus will be adjusted. The discovery of fraud or error that shows that financial statement are incorrect. So if you have discovered some fraud or error after balance sheet date but before date of approval, that will be also adjusting event. Following are non-adjusting event: decline in the market value of investment, any subsequent decrease in the market price, major business combination, announcement of a plan to discontinue. Correct. Now for example, this is important what they want to say. Suppose this is the reporting date, this is the date of approval. Now suppose you have planned for discontinuation. An announcement was done at this point of time. Means announcement of such plan. So we have done IND AS 37 restructuring. The restructuring may there must be constructive obligation on balance sheet date if the two conditions are provided. Two conditions are satisfied. There should be a detailed plan and announcement of such plan. So we have a detailed plan before reporting date, but announcement was done after reporting date but before approval of financial statement. Adjusting, non adjusting. देखो अभी भी हो रहा है adjusting. I know in this though everyone will do mistake. It is a non adjusting because there was no constructive obligation on reporting date. The condition arises after reporting date, therefore it is a non adjusting event. चलेगा? Yes sir. Then major purchase of asset, classification of non-current asset as held for sale after reporting that. This point already we have done in IND AS 105. Okay. Changes of foreign exchange rate, this is also non-adjusting. Major litigation after what? Settle after reporting date. So any litigation happened after reporting date, it will be always what? Non-adjusting event. Now there are three special cases. First is what? Long-term loan. Long-term loan. This is important from exam point of view. What they want to say? Already we discussed this point in IND AS 1 also. Suppose this is 31st March and there was some loan which is of long-term nature and there was a breach of contract either on or before reporting date, and because of that breach it become payable on demand. So it will become current liability on balance sheet date. Now what happened? The bank agreed not to demand payment before what? Approval of financial statement. The bank agreed not to demand payment before approval of financial statement. So what IND AS 10 says, it is an adjusting event and this will not be a current liability. Now it will become non-current liability. However, there is one carve out in this case. International accounting standard says it is what? Non-adjusting event. So as per IND AS 10 it is what? Adjusting. As per international accounting standard it is what? Non-adjusting. Correct? So that point is only given, you can read it. Correct. Then going concern, what they said, whenever any entity become non-going concern after reporting date, then financial statement need to be adjusted and it will be prepared by making some fundamental changes in the basis of accounting. Fundamental changes in basis of accounting means you need to prepare now financial statement on non-going concern basis. Non-going concern basis means what they want to say is suppose they after 31st March there is a fire occurred and there is a huge loss. Correct. Now there can be two situations. Either going concern is valid or going concern is not valid. So if going concern is valid, then it is a non-adjusting event. Then no adjustment required, only disclosures are required. But if going concern become invalid or inappropriate, then it will become an adjusting event and the financial statement of this year will be redrafted by making a fundamental changes in the basis of accounting. Chalega? Yes sir. Then last point is very simple. Proposed dividend. Any dividend declared after what? Any dividend declared after reporting date will not be recognized as a liability in the balance sheet. It will be always non-adjusting event. Correct now? So any dividend declared to the holder of equity instrument. When I am saying holder of equity instrument, so this will include both equity dividend as well as preference dividend. Preference dividend for whom? Which has been classified as what? Equity, not classified as financial liability. So it will include any preference shares which has been classified as equity. Chalega? Yes sir. Then the next point is about what? Distribution of non-cash asset to the owner. As per the appendix A to IND AS 10. As per the appendix A to IND AS 10. So they have given some accounting treatment for this. What they want to say? If any entity has distributed any non-cash asset to the owner, then appendix A to IND AS 10 will be applicable. Means distribution of cash is not covered here. Distribution of non-cash asset or a combination of non-cash asset or a combination means an option has been given that you can either demand what? Non-cash or you can demand cash. An alternative option has been given, that is also covered under appendix A to IND AS 10. So distribution of non-cash asset, an option has been given with non-cash, you can also demand what? Cash. So that will be done as per appendix A. So what appendix A says that on the date of proposal, of course no journal entry. On the date of proposal, no journal entry. On the date of declaration and approval, can I say it become what? A liability. So we recognize the liability and will pass one journal entry retained earning account debit to dividend payable. Dividend payable or dividend distribution with the amount equal to the fair value of non-cash asset. With an amount equal to the fair value of non-cash asset. So this is relevant with the fair value of non-cash asset held for distribution. Held for distribution. On reporting date before distribution. Means suppose there is some reporting date before actual distribution. So we need to reassess the fair value of non-cash asset. Any increase or decrease in the fair value of non-cash asset will be also adjusted in retained earning. Means suppose increase in fair value, so we'll say retained earning debit to dividend payable. If decrease in fair value, then dividend payable to retained earning. Correct. Then on actual distribution, will pass one journal entry dividend payable to non-cash asset. Dividend payable will be with their carrying amount. Non-cash asset will be their carrying amount. Any difference will be known as gain or loss on distribution. And that gain or loss on distribution will be transferred to PL, not to retained earning. So this gain or loss will be transferred to what? PL. Understood this point? Correct. On the date of distribution, of course, we need to remeasure. That is retained earning. That reassessment already I have said, na. Reassessment will retain earning. No, no, on the actual distribution also. First reassessment, then distribution. First reassessment, then distribution. Correct now. Understood? Right. So first do reassessment. Reassessment will be transferred to retained earning. But any difference between these two accounts will be transferred to what? Profit and loss. Got this point? So one question has been given in MCQs. Actually there is no question of this nature given in ICAI study matter. But one question I have done. They have given one question for what? With the cash alternative. Now suppose what is the question? I'll just make you that question. Suppose there are 1000 shareholders. 1000 shareholders. Option has been given. Either you take non-cash asset whose fair value is 750. Okay. Or you take cash of 700. Option has been given. Now the probability is that 60% will, the probability that there is some estimation done. It is a probable that 60% will apply what? And 40% will apply what? Cash. So what will be the amount of dividend? The amount of dividend will be 1000 into 60% into 750 and 1000 into 40% into 700. This will be the amount of dividend. This will be the amount of dividend. Understood this point? So this type of question can be asked in exam. Understood? The one question has been given MCQ of ICAI. They have not given any question in ICAI study material. In MCQ they can ask any question now. It means. Chalega? Understood? So with this IND AS 10 also done. We'll take a break. After break we'll do the balance part. Balance part mein what are left? IND AS 101 34 and IND AS 116 का एक small portion is left. चलो, we'll take a break.
చేసుకునే నెంబర్ ప్రస్తుతం డిగ్రీగా ఉంది. తరువాత ప్రయత్నిద్దాం.
Hello. ना चलो sure. Can we start once again, everyone? So we'll start with IND AS 101, first time adoption of IND AS. Now from my point of view, this is what? Not so much important from exam point of view, because normally they are not asking a question from this particular topic. Normally I am saying they have asked in many exam, but not normally. And okay, this chapter is actually important only when an entity is adopting IND AS for the first time. Therefore this IND AS will be used only on any specific circumstances. Correct now? So from practical point of view also, suppose that entity came to you, then only you read and do it. So knowledge is not so much required, I will say, practically also. Once you become CA and suppose you are applying IND AS for the first time for any entity, I will say go through IND AS and then do it. Correct now? Am I right or not? But chalo theek hai, we need to study everything from exam point of view. This first time adoption of IND AS, so this is applicable to only existing company. This is not applicable to any new company for which IND AS is applied from the incorporation date. Then IND AS 101 is not applicable. So IND AS 101 will be applicable to any existing company which are applying right now accounting standard. And now IND AS is applicable. So how to translate the financial statement which has been prepared as per what? AS to what IND AS. This is the objective of this chapter. So what they are saying, suppose IND AS is applicable for the first time for this year 1/4/2023. So 23-24 will be the financial year for which we will be preparing first IND AS financial statement. First IND AS financial statement. Correct. Now can you say for this financial statement we want also previous year figure. So for this also we want what? Figure as per IND AS only. As per IND AS. And for preparing this financial statement based on IND AS, we want opening balance based on IND AS. Correct. So this date is known as date of transition. This date is known as date of transition. So beginning of previous year means on 1/4/2022, this will become the date of transition. And on the date of transition, we prepare opening IND AS balance sheet. Opening IND AS balance sheet. The objective of this chapter is to prepare opening IND AS balance sheet. Opening IND AS balance sheet. And once you prepare opening IND AS balance sheet, then for the subsequent year we need to apply IND AS as per respective IND AS. As per respective IND AS means we are not going to study anything about this period. Once you prepare opening IND AS balance sheet, then you can apply any IND AS and accounting treatment based on that IND AS. So objective is to prepare what? Opening IND AS balance sheet on the date of transition. On the date of transition. Correct. Now how to prepare that opening IND AS balance sheet? Because when I am saying AS will now become IND AS, it is changes in accounting policy. And when I say changes in accounting policy, we do retrospective or prospective accounting. Retrospective accounting from the beginning. So everyone will die. No one prepare only. So because of that reason, Ind AS 110 has given some relaxation, means they have given some exemption from retrospective application of accounting policy. So they have given some voluntary exemption or they have given some mandatory exemption. So that only we need to understand how to find out a carrying amount of assets liability based on the exemption given under Ind AS 101. This is the objective of this chapter. Understood? Yes, sir. So we need to understand what are the mandatory exemption, what are the optional exemption. But one thing is very much clear, that they have not given any exemption from disclosure requirement. They have not given any exemption from disclosure requirement. They have just given exemption from retrospective application of Ind AS, from retrospective application of Ind AS. Correct? Now there are some keywords. First, Ind AS financial statement you have understood. Correct. Now first time adopter means any entity who adopted Ind AS for the first time in this chapter will be known as FTA, first time adopter. Date of transition you have understood. The beginning of previous year will be the date of transition. Previous gap. Now previous gap, what they said, previous gap will be that gap which will be as per Indian context. So of course, as per Indian context means financial statement which has been prepared as per Companies Act 2013 and as per the accounting standard which has been notified under Companies Accounting Standard Rules 2006. So previous gap has been defined by giving reference as per the Indian context. Correct now? Understood? So as per Companies Act 2013 or AS notified under Companies Accounting Standard Rules 2006. Means suppose any entity who is preparing two set of financial statement before adopting Ind AS. One is based on AS, one is based on IFRS. So therefore previous gap will be what? Based on AS, not based on IFRS. Understood this point? Yes, sir. Now opening Ind AS balance sheet, how to prepare? So what they are saying, that first you should recognize all asset, all liability whose recognition is required as per Ind AS. Whose recognition is required as per Ind AS. Then second, de-recognize the item of assets and liability which Ind AS do not permit for recognition. So we'll need to de-recognize all the asset and liability which are not permitted as per Ind AS. Then we need to classify, means reclassify the item of assets and liability and other component of equity as per the requirement of Ind AS. For example, investment will be any financial asset will be classified as FBTPL, FBTOC and AC. Any compound financial instrument will be classified as equity component and liability component. To all the reclassification will be done as per the requirement of Ind AS. Then after reclassification, we'll do measurement of all the assets and liability which have been recognized as per Ind AS by availing the optional and mandatory exemption. So for measurement principle, we need to apply what? Exemption given under Ind AS 101. Now after that exemption means whatever exemption you have consider, any difference in previous balance sheet and of course the previous carrying amount and Ind AS carrying amount, any difference will come. So that difference can be either adjusted to retained earning or other component of equity or goodwill So it will be adjusted either in retained earning or any other component of equity or goodwill. Goodwill means only in case of what? Business combination. Only in case of business combination. Understood? Correct. This much you understood? Correct. Now let us come to what? Exemption. So first we'll do mandatory exemption, accounting estimate. Accounting estimate. Now what Ind AS 101 says, that if any estimate which is required by previous gap, suppose any estimation was required by previous gap and there was no such estimation done, then can I say make estimate reflecting the condition at relevant date. So we need to make new estimation reflecting the condition at relevant date. But if estimation was done, if estimation was already done as per previous gap, correct, and there is no evidence of error, if there is an evidence of error, then we need to make estimate reflecting the condition at relevant date, means make new estimation. But if there is no evidence of error and which is consistent with Ind AS, there is no error and which is consistent with what? Ind AS, then use previous estimation. Then there is no need to make new estimate. But if there is no evidence of error but which was not consistent with Ind AS, which was not consistent with Ind AS, then use previous estimate and adjust to reflect with the Ind AS. Understood? Correct. For example, I will say one best example. I will say AS 26 says that useful life of any intangible asset should not exceed 10 years. But as per Ind AS 38, we need to estimate the finite life, which can be more than what? 10 years. If it is finite life, or it may have indefinite life also. So can I say, if suppose for any intangible asset we have taken 10 years, so there was no error as per previous gap, but it is not consistent with what? Ind AS. It is not consistent with Ind AS. So we need to use previous estimate after adjusting to reflect what? Ind AS. Means we can make adjustment related to what? Ind AS. Understood? Correct. Yes, sir. This is estimation done. Coming to next point, derecognition of financial asset and financial liability. Derecognition of financial asset and financial liability. First, one more point to be clear. Just try to understand. Suppose this is what? This is the date of transition. This is the previous year. This is the current year. This two you have understood? Correct. Now, only we are discussing about any transaction which has been done on or before what? Date of transaction. Means any transaction which you have done after the date of transaction, that will be as per Ind AS only. Suppose you have already acquired one property, plant and equipment during this previous year. So initially you have applied AS 10. Now you will apply Ind AS 16. So you need to apply Ind AS 16 on that only. For that no exemption has been given. For that no exemption has been given. If suppose any PP was acquired on or before the date of transition, then for that you can avail what? For that you can avail what? Exemption. Understood? Have you understood this point? Correct. So we are just discussing about all the transaction which has been done on or before the date of transition. Correct? Understood? Yes, sir. So what they are saying, and derecognition of any financial asset and financial liability means a first time adopter shall apply the derecognition requirement as per Ind AS 109 prospectively for transaction occurring on or after the date of transition. So for that apply Ind AS 109 only. But any financial asset or any financial liability which has been already derecognized before the date of transition, for that Ind AS 109 is not applicable. Means if it is already derecognized, then once again do not recognize it, even though it is recognized, it need to be recognized as per Ind AS 109. Understood this point? What they want to say? Suppose this is what? The date of transition, and there was one debtor which has been already derecognized as per previous gap. But that derecognition was not permissible as per what? Ind AS 109. Why? Because suppose risk and reward was not transferred. If risk and reward was not transferred, can you derecognize it? You can't derecognize it. But now can you apply Ind AS 109 on this? No. Once derecognized as per previous gap, then do not apply Ind AS 109 on them. Correct. But any debtor which has been derecognized on or after date of transition, on that apply Ind AS 109 on a prospective basis. Samjhe this point? So this is mandatory exemption has been given for what? Any financial asset or financial liability which has been derecognized before what? The date of transition. Chalega? Yes, sir. Then coming to NCI, what they are saying, any NCI non-controlling interest will be recognized at a carrying amount equal to previous gap on the date of transition. Means there is no need to apply Ind AS 110 on retrospective basis. Correct? Understood what I am saying? So what they are saying, NCI on the date of transition, this NCI will be equal to carrying amount as per previous gap. It means there is no need to apply Ind AS 110 on retrospective basis. There is no need to apply Ind AS 110 on retrospective basis. Means can I say, now we know that as per AS 21, means as per CA interconsolidation, that minority interest cannot have what? Negative balance. But as per Ind AS 110, minority interest can have what? negative balance. It means can I say on the date of transition it will be always positive balance. It cannot be negative balance. Understood this point? Yes sir, correct. Means can I say it can become negative balance only afterward the date of transition. So it need to be applied, Ind AS 110 need to be applied on prospective basis from the date of transition. But there is one exception to this rule. What they want to say, if suppose any business combination which have been occurred before what date of transition. So we will do voluntary or optional exemption. In that case they have given two options, either to restate on retrospective basis or to restate on prospective basis. Means there is no need to restate means. So if any business combination which have been restated on prospective basis, it means can I say if you are applying if suppose any business combination for which you are doing restatement on retrospective basis, so it means you are applying Ind AS 110 also on retrospective basis. In that case NCI can have what? Negative balance. In that case NCI can have negative balance. Understood? So can I say in this way? In this way for NCI, if business combination has been restated on retrospective basis, then NCI carrying amount will be calculated by applying Ind AS 110 on retrospective basis. Have you understood this point? Means it can have what? It can have negative balance, correct. But if it is not restated on retrospective basis, then entity can avail what? Mandatory exemption. Have you understood this point? In this case NCI will be equal to carrying amount as per previous gap, and in this case it cannot have what? Negative balance. On which date? Negative balance on the date of transition. Cannot have negative balance on the date of transition. Understood this point? Have you understood? Yes. NCI, this can be important from exam point of view. Then government loan, which is very important, can be asked in exam. What they say about government loan? Ki any government loan, first entity shall classify that government loan as financial liability or equity instrument as per the definition given under Ind AS 32. Means either it will be equity or financial liability. First classify it as financial liability or equity instrument as per Ind AS 32. Then there is no need to apply Ind AS 109 or Ind AS 20. Because why we are saying Ind AS 20? Because that government loan can be at concessional rate of interest. So whenever there is a concessional loan by the government, then grant will be also recognized. So there is no need to apply Ind AS 109 and Ind AS 20 on retrospective basis, correct. So in that case the carrying amount of loan will be equal to what? Previous carrying amount. So carrying amount of loan will be equal to what? Carrying amount as per previous gap, and will not recognize any deferred income, will not recognize any deferred government grant. Understood? But once in this also there is one exception. If the entity may apply all the requirement of Ind AS 109 and Ind AS 20 retrospectively to any government loan originated before the date of transition, provided that information needed to do so had been obtained at the time of initial accounting for that loan. Means I will just give you from examination point of what they want to say. The government loan from examination point of view. If market rate of interest of loan is not given in question from examination point of view. If market rate of interest is not given in the question, understood this point? It means entity can avail mandatory exemption. Understood? In this case, the loan will be equal to carrying amount of previous gap, and no need to recognize what? No need to recognize deferred income. No need to recognize deferred income. And this loan, we need to calculate effective rate of interest EIR, which will be equal to rate of interest at which present value of remaining contractual cash outflow is equal to carrying amount. And this rate of interest will be now used for subsequent accounting, that is at amortized cost. Understood this point? But if the market rate of interest is given, if market rate of interest is given in question, then entity has two options. Either follow this, then entity has two options. Either follow this or apply IND AS 109 and IND AS 20 on what? Retrospective basis. Have you understood this point? Have you understood this point? Correct. This you have understood? So this I have just given from exam point of view. In what situation what you are supposed to do. Correct? Got it. Done? Then next point is classification and measurement of financial asset and financial liability. Classification and measurement of financial asset and financial liability. In this there are 2 points. How to do the classification? So normally when we say classification is based on the circumstances available on initial recognition. Correct now? But one mandatory exemption has been given. Now classification will be based on the circumstances available on the date of transition. So whether it will be AC, FBTPL, FBTOC, that depend upon the circumstances available on the date of transition. First thing you understood. Now second thing, if they are AC or FBTOC debt instrument, do we want EIR? Then we want EIR. So how to find out that EIR? So for that purpose what they are saying that it will be measured, means on the date of transition all the financial asset and financial liability will be measured at fair value. And this fair value will be used to calculate what? EIR. So based on that fair value EIR will be calculated. Understood? So what they are saying? IND AS 101 provide an exception to the general principle by requiring that such assessment should be done on the date of transition to IND AS, means the assessment about the classification. IND AS 101 require the measurement of amortized cost of financial asset and financial liability using effective interest method. As an exception to general principle, IND AS 101 provide that if it is impracticable for entity to apply retrospectively the effective interest method, the fair value of that financial asset or financial liability shall be taken as a new gross carrying amount of that financial asset or the new amortized cost of financial liability at the date of transition. Means based on that fair value, ER will be calculated. So ER will be calculated based on that fair value on the date of transition. So in this case, can I say this financial asset or financial liability, the carrying amount will be equal to fair value on the date of transition, will be equal to fair value on the date of transition. Chalega? Yes, sir. Next point. Next point is voluntary exemption. So first is business combination. Already I have said about business combination. Business combination, there are two options given, either restate on retrospective basis or there is no need to restate. When I am saying there is no need to restate, then take carrying amount as per previous gap. Then take entire carrying amount as per previous gap. Means from examination point of view, can you see the fair value of INA on the date of acquisition is not given? So can you apply retrospectively? Are you able to understand? If suppose the fair value of INA on the date of acquisition is not given, can you apply retrospectively? Then you can't apply retrospectively. So whenever fair value of INA on the date of acquisition is not given, it means they don't want to restate on retrospective basis. But option has been given, you can also restate on retrospective basis. Correct. Now in that case, what they are saying, if you want to restate one of the business combination on retrospective basis, then all the subsequent business combination need to be also restated on retrospective basis. Means suppose this is the date of transition and there is one business combination, second business combination, third business combination, fourth business combination. Correct. And you want to restate this business combination on retrospective basis, then you need to also restate what? 3 and 4 also as what? Retrospective basis. You can ignore what? One there is no need to restate on retrospective basis. Correct. Understood this point? Have you understood this point? Correct. Now one thing we have understood, that if business combination means if IND AS 103 is applied on retrospective basis, then IND AS 110 will be also applied on retrospective basis. Correct. Now in that case one doubt will come, sir, suppose as per previous gap one entity was not a subsidiary, but now as per IND AS it becomes subsidiary. As per IND AS it becomes subsidiary and we do not want to restate on retrospective basis, then what will do? Now if you want to restate on retrospective basis, then to no doubt you apply what? Retrospectively IND AS 103 on that. But if you do not want to restate on retrospective basis, that in that case what IND AS 110 say, IND AS 101 says that that date of transition will be deemed acquisition date. Date of transition will be the deemed acquisition date, and on the date of transition calculate goodwill or gain on bargain purchase. Calculate goodwill or gain on bargain purchase. Understood this point? So if an entity which was not a subsidiary as per previous gap but now becomes subsidiary as per IND AS, and business combination are not restated on retrospective basis, then the date of transition will be treated as deemed acquisition date, and goodwill or gain on bargain purchase will be recognized on the date of transition. Understood? Now suppose business combination is not restated on retrospective basis, but there is some contingent consideration. So how to recognize that contingent consideration? So what IND AS 101 says that in that case the contingent consideration will be recognized as per previous gap. There was no contingent consideration, so it will recognize that fair value on the date of transition through retained earning. So if suppose business combination is restated on a retrospective basis, then to no discussion required, already contingent consideration will come. But if the business combination is not restated on a retrospective basis, then recognize contingent consideration on the date of transition at fair value on the date of transition through what? Retained earning. So what journal entry to retained earning account debit to contingent consideration, whether it can be either classified as financial liability or equity depending upon the requirement of respective IND AS. Chalega? Yes sir. The next point is what? Assets and liability of subsidiaries, assets and joint venture. Now this may be important what they want to say, just try to understand. There can be two situations. Suppose this is a parent company. This is a parent company. Correct. Now an IND AS was applicable on this date, and there was one subsidiary company. There was one subsidiary company to whom IND AS was applicable on this date. Whether it is practically possible, means to subsidiary company IND AS was not applicable on this date. How it is possible? because the parent company Ind AS is applicable, so to their subsidiary company also Ind AS is applicable. Yes or no? This rule, so you know na? Correct? Very good. Can this subsidiary company can be banking company or insurance company, or it can be NBFC also. For that we have a different applicability of time. Correct now? So it is quite possible. This situation may arise practically. Yes or no? So in this case doubt will come कि now subsidiary become what? FT on this date. Subsidiary become FT on this date. So they have given two options to them. Either they can include, means whether they can take the carrying amount of assets and liability as per consolidated financial statement of parent company. Means in this, so of course they have already applied Ind AS. So already they have taken all the assets and liability of which company? Subsidiary company. Correct now? So they have already taken all the assets and liability of subsidiary company. So they can take that carrying amount. They can take that carrying amount, or they can apply Ind AS 101 separately by taking the separate exemption in their financial statement. The two option is available to them. Understood this point? What they have given? Check करेंगे. What they are saying? The carrying amount. If a subsidiary become a first time adopter later than its parent, understood? The subsidiary shall measure its assets and liability at either the carrying amount that would be included in the parent consolidated statement based on the parent date of transition to Ind AS, or the carrying amount required by Ind AS 101 based on the subsidiary date of transition to Ind AS. So two option is given to them. I hope you have understood this point. Correct. The second point, a situation may arise कि subsidiary company become Ind AS is applicable at this point of time for subsidiary company. Correct. And for parent company, Ind AS is applicable at this point of time. For parent company, Ind AS is applicable at this point of time. Quite possible. This is also quite possible. Correct. So suppose this is 1/4/2021. This is 1/4/2022. Now in that case, can this parent company need to apply Ind AS 10 means Ind AS 110 or equity accounting, equity method accounting? It can be associate also, it can be joint venture also. Are you able to understand? So in that case, what will be done? So what they are saying, in that case, they can take the carrying amount of assets and liability of this subsidiary company based on this financial statement. Based on which financial statement? This financial statement, because they have already adopted what? They have already adopted Ind AS. Understood? So that is only given, a clarification has been given what they have given. However, if an entity become first time adopter later than its subsidiary or associate or joint venture, entity shall in its consolidated financial statement measure the assets and liability of the subsidiary or associate or joint venture at the same carrying amount as in the financial statement of subsidiary after adjusting for the consolidation and equity accounting adjustment and for the effect of business combination in which the entity acquired the subsidiary. Means after adjustment means what? After doing the relevant adjustment for consolidation accounting, for example fair value adjustment, etc. Correct. Now that of course need to be done, but carrying amount that can be taken as per the financial statement of subsidiary company. Chalega. The next point is what? Deemed cost of PP, intangible asset, investment property. This is important from examination point of view. So what they are saying, for PP, intangible asset and investment property, the carrying amount on the date of acquisition will be either equal to, means either you can apply respective Ind AS retrospectively, or you can have a deemed cost exemption. Now deemed cost exemption means what? The deemed cost on the date of transition can be either carrying amount as per previous GAAP, or it can be fair value on the date of transition. Fair value on the date of transition means, I will say there are three options given. Either apply Ind AS retrospectively, or it will be equal to carrying amount as per previous GAAP, or it will be equal to what? Fair value on the date of transition. Fair value on the date of transition. Understood? As per the information given in the question, you will do as per the information given in the question. Now just try to understand. Suppose this is the date of transition and there is one property, plant and equipment, and you have taken carrying amount as per previous GAAP. So then no difference. No difference will be there. Means you have taken carrying amount will be equal to carrying amount as per previous gap. Then no difference will arise. And subsequently you can adopt cost model or revaluation model as per IND AS 16. Now suppose second option PP. Suppose you have adopted fair value as the deemed cost exemption, means carrying amount is equal to fair value on the date of transition. So of course some difference will come. Now subsequently you can go for what? Cost model or revaluation model. Subsequently you can go for cost model, revaluation model. So there is a clarification that even though you have taken what? Fair value as deemed cost exemption, it does not mean you can't adopt cost model subsequently, because IND AS 16 will be applied subsequently. So subsequently you can go for what? Cost model or revaluation model. I hope you understood. If you have gone for cost model, then this difference will be transferred retained earning. If you have gone for revaluation model, this difference will be transferred to revaluation surplus. Understood this point? Have you understood this point? Correct. This point also you have understood. Chalega. Now coming to, suppose there is one PP, intangible asset and investment property. Now the question is that, can we apply IND AS 16 retrospectively? Can we ever, for this, can we go for fair value on the date of transition? And can we go for carrying amount as per previous year? Well, permitted. This is permitted. This is permitted. Okay. But now one doubt will come. Suppose we have a PP and there is a land, building and furniture. Can we apply IND AS 16 retrospectively? And for this can we take fair value? And for this can we take carrying amount? But not permitted. This is not permitted. Means either you apply for all what? Retrospectively, or for all what? Fair value, or for all what? Carrying amount. Understood? Correct. Now one more doubt will come. Suppose there is one parent company, there is one subsidiary company. It has property, plant and equipment, and it has what? Property, plant and equipment. So in their separate financial statement and in their individual financial statement, can we apply IND AS 16 retrospectively, and can we take fair value? Or permitted? This is permitted. But can this parent company will prepare consolidated financial statement? In that case, can I say both PP should be based on what? Same principle, because in consolidation become one group, a single financial statement. So here if you are applying IND AS 16 retrospectively, so for this also you need to apply what? IND AS 16 retrospectively only. I am just taking one example. If it is, this is fair value, this will be, should be also what? Fair value. Understood this point? Have you understood this point? Have you understood this point? Yes sir. This also we have understood. Correct. Next, investment in subsidiaries, joint venture associates. Similar point has been given, but this point is applicable for separate financial statement. The same point has been given that any investment in subsidiaries, associate or joint venture, it can be measured by applying IND AS 27 retrospectively or by taking deemed cost exemption, which can be carrying amount as per previous gap or fair value on the date of transition. Understood? Correct. The next is share-based payment. This is important from exam point of view. So what they say, share-based payment. Is share-based payment, they have given 2 points. If it is already vested, before the date of transition, then we have 2 options. Either apply IND AS 102 retrospectively, or take carrying amount as per previous gap. Take carrying amount as per previous gap means no adjustment is required. But if it is unvested, then no exemption is available. Then apply 102 retrospectively only. Then you need to apply IND AS 102 retrospectively. Understood? Simple? Yes sir. So share-based payment is important from exam point of view, can be asked in exam. Then long-term foreign currency monetary item. Long-term foreign currency monetary item. This is also important. Now, do you know about para 46 of AS 11? Para 46 of AS 11. Now, there was one para 46 of AS 11 which has given an option to capitalize. Means that was not mandatory. Entity may opt or they may not opt. If you have not opted, then entire exchange difference will be transferred to PL. But if they have opted, that will be capitalized. Correct now. So what they say, if para 46 or 46A option was availed, if para 46 of 46A option was not availed, understood? Correct? Have you understood this point? As per previous gap, as per AS11, as per AS11, 46 of which AS11. Okay. If it was not availed, then apply IND AS 21. Apply IND AS 21. Correct. But if it is availed, then two options is there. Either continue para 46 of 46A or apply IND AS 21. So option has been given, or apply IND AS 21 from the date of transition. Now what para 46 and 46 used to say, that I need to just give a reference. They used to say, if you have taken any foreign currency loan, if you have taken any loan for depreciable asset, for which asset? Depreciable asset, then exchange difference will be capitalized, to the cost price of asset. Or if it is not for depreciable asset, means you have taken any foreign currency loan which is not for depreciable asset, for any other purpose, then exchange difference will be accumulated in a special account known as FCMI TD account. FCMI TD account. FCMI TD means foreign currency monetary item translation difference account. Foreign currency monetary item translation difference account, and this FCMI TD account will be amortized on PL on SLM basis. Correct? Have you understood? Thoda? Have you understood this? So if you are continuing this, so you can continue this accounting even though you have applied IND AS. Correct? But if you are not continuing this, then IND AS 20 means if you are applying IND AS 21 on that foreign currency monetary item after the date of transition, then entire FCMI TD account balance will be transferred to what? Retained earning. Got this point? So this all point can be asked in MCQ format now. Have you understood this point? I think easy. Correct? Understood. Next point they have said about FCTR, foreign currency translation reserve. So as per AS11 also we could have FCTR. Now if there is some FCTR, then what we'll do? So two options has been given for FCTR. Correct? Either FCTR will be equal to carrying amount as per what? Previous gap. Carrying amount as per previous gap. Or this FCTR will be closed by transfer to what? Retained earning, and after this FCTR will become what? Zero. The entire FCTR account will be closed by transfer to what? Retained earning, and FCTR account will become zero on the date of transition. So two option has been given. This is also important from exam point of view. Understood this point also? Correct. Next point is about compound financial instrument. So what they want to say, ki if any financial instrument means, if any compound financial instrument, the liability means it has been derecognized. If it has been derecognized before the date of transition, then there is no need to split it. Means we can say in this way, an FTA need to split compound financial instrument in separate liability and equity component if liability component is outstanding on the date of transition. If it is outstanding on the date of transition, then only splitting is required, otherwise splitting is not required. In other words, there is no need to split if liability component is not outstanding as on the date of transition as per previous gap. Correct? Means, can I say in this way, suppose this is the date of transition. There was one there was one compulsory convertible debenture of 10%, and this was outstanding on this date. So can you see, you need to apply IND AS 109 on retrospective basis. So first we need to find out fair value of liability component, then find out fair value of equity component on this date, then find out amortized cost on this date, and this will be equal to the same amount, means this will be equal to carrying amount. So on this date this amount will come, means this will become the liability component, this will become what, equity component, and any difference will be transferred to what, retained earning. Any difference with the previous gap will be transferred to retained earning. This can be one important question from examination point of view. Correct? Understood this point? This calculation all you can do. Calculation is not at all difficult. Chalega? Understood? Yes sir. The next point is what? Non-current asset or disposal group held for sale. So what they say that IND AS 101 says that for these the carrying amount will be equal to, yeah, as per IND AS 105. So on the date of transition it should measure any non-current asset or disposal group held for sale at a lower of carrying amount of fair value less cost to sale, whichever is lower on the date of transition as per IND AS 105. Any gain or loss means any difference will be transferred to what? Retained earning. Retained earning. Leases. Now leases, this can be also important, but no question of this nature has been given. So for this what they want to say, if there is some lease, correct? Now this lease can be either short term lease on the date of transition, or it can be lease of what? Low value asset. Then there is no need to recognize what? ROU asset and lease liability. There is no need to recognize ROU asset and lease liability. Correct. But if this is not a short term lease, means it is other lease which is not a short term lease or lease of low value asset, then we have to find out lease liability. Now lease liability will be equal to present value of remaining lease payment. Correct? So it will be present value of remaining lease payment as per the discount rate whatever is given. The question means as per IND AS 116 they have said. It will be as per IND AS 116. And ROU asset will be equal to, means they have given two options in this, A and B. Correct? So they have given present value of remaining lease payment at as per incremental borrowing rate on the date of transition. On the date of transition. So this will be present value of remaining lease payment discounted by using lessee incremental borrowing rate on the date of transition. On the date of transition. But for ROU asset they have given two options, A or B. A or B. First will be equal to what? Lease liability is same amount. Same amount. Or second what they have given, it will be equal to present value of lease payment. Present value of lease payment on commencement date. On commencement date. Understood? Discounted by using incremental borrowing rate on the date of transition. On the date of transition. Means first calculate present value of lease payment on commencement date. Then we should minus what? Accumulated depreciation. This will be what? New carrying amount. This will be new carrying amount. So for this ROU asset they have given two options, either A or B. Either A or B. This can be one important point from examination purpose. Means if they are asking a question from this chapter. Chalega. So what they are saying, let us read. The lessee which is an FTA of IND AS shall recognize the lease liability and ROU asset by applying the following approach. Measure lease liability at present value of remaining lease payment discounted by using lessee incremental borrowing rate on the date of transition. Measure ROU asset either at A or B, means 1 or 2. Is carrying amount as if IND AS 116 has been applied since commencement date of lease but discounted using lessee incremental borrowing rate on the date of transition. Means first calculate present value of lease payment on commencement date discounted by using incremental borrowing rate on the date of transition. Then less accumulated depreciation, that will become carrying amount, or an amount equal to lease liability. An amount equal to lease liability. Understood? Yes, sir. Then FTA will not apply this if this is short term lease or a lease of low value asset. Okay. Now this joint venture, this can be also important because one question of this nature has been given. Joint venture. Now as per AS 27, we used to apply proportionate consolidation method. Proportionate consolidation method means what? If suppose we have a joint venture with 40%, so we'll recognize all asset, liability and goodwill at 40%. Means all asset, all liability, goodwill come 40% in the consolidated financial statement. But now as per IND AS 28, we apply what? Equity method. So we don't recognize any asset, liability individually, we recognize investment at what? Equity method. So what they say that in this case investment will be measured at an amount equal to carrying amount of asset, goodwill minus liability, which has been included as per previous GAAP in the consolidated financial statement. So can you say this will be given, this will be given, this will be given? All you need to find out this will become deemed cost of this investment as per equity method, as per equity method, correct? So the initial investment shall be measured as an aggregate of carrying amount of asset and liability that are previously proportionately consolidated, including any goodwill arising from such acquisition. Okay. Then there is one special point which may be also important from exam point of view. Whenever goodwill belong to larger CGU, suppose goodwill has been given the balance sheet but that belong to larger CGU, means it belong to joint venture, subsidiary and other CGU also, then some proportionate goodwill should be allocated. So how to allocate a proportionate goodwill? So you write down total goodwill given in the balance sheet multiplied by carrying amount of INA of joint venture divided by carrying amount of INA of larger CGU. Larger CGU means entity as a total. Larger CGU. This become one formula. So total goodwill will be given multiply by carrying amount of INA. INA means identifiable net asset of joint venture given in the balance sheet divided by carrying amount of INA of larger CGU. Larger CGU means total and entity as a total. Entity as a total. This proportionate amount will be allocated to joint venture. Correct. One question of this nature has been given in ICAI study method that you do. Okay. Understood. With this we have done all the discussion. All the discussion we have done. Now in this disclosure, one question which is important from my point is reconciliation. Normally they will ask this reconciliation. Reconciliation already have been asked in exam. So this become one important question from examination point of reconciliation of equity of previous GAAP as per what? IND AS financial statement. So we need to reconcile equity of previous GAAP with equity as per IND AS financial statement. So this become one important question from examination point, but equity you can reconcile. What you have done? If you want, I can take that question. I will take that question better because that question is only expected. I'll take the exam question already asked in exam. This question. Rennie Private Limited is a company registered under Companies Act 2013. Following accounting standard notified under Companies Accounting Standard Rules 2006. The company has decided to present its financial under IND AS for the year ended 31st March 2021. The transition date is 1st April 2019. The following adjustments were made. The company opted for fair value is land on the date of transition, means they will apply deemed cost exemption and take fair value as the carrying amount. The fair value of land was 95 lakh. The carrying amount under existing gap was 42.75. So how much increase? 95 minus 42.75 is equal to 52. So guys, this will be transferred to retained earning or revaluation surplus depending upon which model they are adopting in future, but that is not given. That is not given. The question is silent. You can transfer either to retained earning or revaluation surplus. In the solution, they have transferred to what? Retained earning. The question is silent will follow what this only. Why to go against ICAI? Correct? Understood? If suppose this is given the question, they want to adopt what? Revaluation model. Then the difference will be transferred to what? Revaluation surplus. This keep in your mind. Chalega? Because in some of the question that point is also applicable. The company has recognized a proposed dividend of 5.7 lakh and related dividend distribution tax. So now this is not permitted. So if you cancel it, can you say retained earning will increase by how much? 5.7 plus 1.65. How much? 7.35 lakh. So retained earning will increase by 7.35. The company has a non-integral foreign branch in accordance with AS 11 and had recognized a balance of 2 lakh as a part of reserve, means FCTR. Part of reserve means FCTR, foreign currency translation reserve. On first time adoption, the company intend to avail India's exemption, restating cumulative difference to what? 0, means entire FCTR will be transferred to retained earning. So your retained earning will increase by what? 2 lakh. Correct now? The company has made an investment in subsidiary for 18.62 lakh and carried at fair value 25.75 lakh on the transition date. The company intend to recognize the investment at fair value. Fair value. So once I increase how much? 18.62 minus 25.75. How much increase? 7.13. So increase in retained earning by 7.13. The company has the equity share capital of 760 lakh and redeemable preference share capital 180 lakh. So 180 lakh will be redeemable, means now it becomes financial liability. It will be reclassified from equity to what? Financial liability as per Ind AS. The company identified the preference shares with the nature of financial liability. I was knowing this point. Understood? The reserve and surplus before the transition to Ind AS was 910 lakh, representing 380 lakh general reserve and 40 lakh capital reserve acquired out of business combination and balance in surplus retained earnings. So what is the balance? Batao. 910 minus 380 minus 40 is equal to 490. So 490 become retained earning. What is the balance of total equity after transition to Ind AS? So first you need to find out total equity as per Ind AS. So reconciliation between total equity as per AS and as per Ind AS to be presented in the opening Ind AS balance sheet. Ignore deferred tax impact. The question of 8 marks. Super easy question. But if you have not done this chapter, or if you have not revised this chapter, so can you say then question will be thrown atpata in exam? Means you will not be able to understand what they are asking. Correct now. One thing just try to understand. Normally what happens, or बताऊंगा कि suppose you have done this chapter 3 months before, already done. Now this is the exam time. Now last revision you have not done for this chapter. Understood what I am? Last 5 days you have given to FR, and these 5 days you have not revised 101. But hi, at this point of time you have done. Now the question is that can you recall this point? Can you recall? 90% time no. कल का बात याद नहीं रहता है. And why? Because you are not doing only FR na. With FR there are 6 more subjects which you are doing. And our brain is what? Have only small portion of which we use. And this small person might have what? 2 TB. 2 TB, you know. This is what? Memory. In this 2 TB, 70% is unwanted things that we do not delete. So only 30% will be what? Only for study. 30%. Yes, this is fact I am saying. 70% is unwanted things that we don't delete. If we delete, then it becomes 2 TB na. But we don't delete. वैसे का वैसे रहता है. So only 30% is for study. Now you have done FR. Okay. Then you have done SFM, okay. Then you have done DT. So this FR will be what? Shifted and will go to what? Recycle bin. Recycle bin. So till you revise, it will not be restored. Recycle bin to khatam na. Correct na? So it will be in recycle bin. But for recalling, what is required? Revision is required. So if you have done this chapter before 3 months, high chances that you will not be able to recall in exam. High chances. Therefore, smart revision is required. Revise all the points. If you revise all the points now, automatically you will be able to understand, yes, you are what you are supposed to do in exam. Therefore, complete revision is also required. Chalo, FR mein to you have 5 days. But for other subject, you have only 1.5 days. वहाँ तो all this is more challenging. More challenging ना? FR तो you can give 6 days, चलो 7 days. But for DT, IDT, AFM, you have only 1.5 days. More challenging. More challenging. अच्छा हुआ FR is not second, third exam. Then तो everyone would have died. So for FR अच्छा हुआ you have 5 to 6 days. Because FR is a big subject. Now this is very simple. So can I say share capital? First you write on equity share capital 760. Then preference share capital will not come. Then we write on other equity. General reserve will be as it is. Capital reserve will be as it is. Then retained earning opening balance 490. Then whatever you have done increase, all will come. This will become retained earning means other equity. This will become equity as per Ind AS. Now you need to just identify equity as per AS. So this become total equity as per AS, which is nothing but equity share capital, preference share capital and reserve and surplus. You need to now reconcile this with equity as per Ind AS. So you need to first de-recognize the financial liability. Then you need to increase all the retained earning due to fair value adjustment or whatever adjustment. So automatically it will become equity as per Ind AS. 8 marks, 3 marks. This is 4 marks, 4 marks, 3 marks. Normally I see it is 3 marks even in exam. But have you done revision? That is a point. Understood? इस क्वेश्चन में क्या है? कुछ नहीं है. But 8 marks is there. Consolidation you are doing every time. 16 marks question. Only in this you need to do revision for 10 minutes. बोलना है सुनो. For CFS you are doing revision day night. Business combination you are doing revision day night. That also we don't know whether balance sheet will tell you or not. But for this only I will say if you give 1 hour effectively, or I will say less than 1 hour, and the question is coming, you can score full out of full. So small chapters don't ignore. Small chapters is actually to make your marks from 40 to 80. Means your marks will become from 40 to 80 if you are good in what? Small chapters. And if you are not good in small chapters, then less marks. Understood? Now one more question I would like to take, which is for what? Conversion of AS balance sheet into what? Opening Ind AS balance sheet. What type of question they may give? This is one question I have taken. However, scope is very less for this type of question. Why? Because they are asking this type of question, means that will be 16 marks. Means they can't ask them question from what? CFS, finance instrument. Correct. Scope is less, but you don't know ICAI. Suddenly they will give this question and they will not ask any question from consolidation. Unexpected things are always expected. Always expected. Correct? So don't take any risk. Can I say once you have done one time, this is very super easy question. Soria Limited is the company having its registered and corporate office at New Delhi. 60% of Soria Limited shares are held by Government of India and rest by other investors. This is the first time Soria Limited would be applying Ind AS for the preparing its financial for the current financial year 1920. But what is the date of transition? 1st April 2018. Very good. It means they have given correct balance sheet. We want this balance sheet only. So this balance is as per previous gap. We need to change it to what? India. Now there are two things. First we need to do reclassification and then adjustment. So first do reclassification, then adjustment. Don't do first adjustment then reclassification. First what? Reclassification. Then what? Adjustment. Understood what I am saying? Yes, sir. So this is the balance sheet. You can read. Additional information. Now how to do this type of question? I am just giving the method. However, can you write down in question paper? Can you write down anything in question paper? No, you can't write down in question paper. Correct now. You can't write down in question paper and don't write. Don't write, because last time I have seen that some of the students, they have written something in question paper and their results were withheld. Understood? So don't write, don't take any risk. Now ICAI is becoming more strict. More strict. Understood? So don't write anything in the question paper. But can you give a star mark like this? Can you write down a star mark like this? Yes, that you can do. Star mark, tick, cross, that you can give. Understood? That is for your understanding the question. You are understanding the question, na? Are bolna re? You can or you can't. You are all silent. Can you give a star mark? Can you give cross? Can you give tick? That much you can do. That much you can do. Sure. But don't write any amount. Now how to read? First, other current liability. When you are reading the question, you should prepare for question also, solution also. Understood? Means think about solution also right now. Other current liability include 3,90,000 liability to be paid in cash. Means can this become a financial liability? This is a financial liability, na? This is a financial liability. Okay. And such as expense payable, salary, etc. And 60,000 is statutory government dues. But the statutory government dues is a financial liability. It is not a financial liability. So guys, this is other current liability only. So just write down in other current liability. Wherever other current liability is given, give one star mark. Understood? Because when you are preparing balance, you will understand there is some adjustment regarding this. Or you can also write, means you can also write down point number 1. Point number 1. That is better. Write down point number 1. For this, they will never take your paper, because this is only an identification. This is not an amount. Not an amount. And write down very what? Small. Very small. Correct? Don't write down like this. I am just giving a way how to solve the question in a very less time. So reading is more important. Solution will not take much time if you have taken good time in reading only. Okay? Now second point. Long-term loans advance include 40,000 loan. So 40,000 loan become what? Financial asset? Bola yes or no? This you can't write, but I am just explaining. I am explaining though I am writing. You can just circle it. Okay? This amount you can circle it. So this become what? Financial asset, and the remaining amount consists of advance to staff. So advance to staff, any advance given to staff, whether it is a financial asset or it is not a financial asset. Now advance to staff, there are two type of advance. One is known as prepaid salary. Prepaid salary is not a financial asset. But if you have given some advance and that is receivable in cash, so that is a financial asset. So how can you say it is not a financial asset? Can I say if it is adjustable salary, that is prepaid salary. We call it what? Prepaid salary. So this will be also financial asset, but this will be other financial asset. Other financial asset, correct? So this is including long-term loans advance. Chalo, long-term loans advance. So write down what? Point number 2. Point number 2. Understood? Correct. Other non-current asset 2 lakh consist of capital advances to supplier. Now any capital advances given to supplier. Capital advance means what? Advance given to purchase any PP, etc. My question to you is, suppose you have given any advance for purchase of PP, etc. and that PP can be purchased within 12 months. So that capital advance will be current or non-current? Have you understood the question? Once again, if you have given any advance to purchase PP and that PP can be purchased within 12 months, so that advance will be current or non-current? No, capital advance will be always what? Kasam kalo, capital advance will be always, but the capital advance is a financial asset, not a financial asset. Not a financial asset. So can you see it is correctly included because this is other non-current asset, and therefore no adjustment required. No adjustment required. This is very, I will say this is favorite point of the institute. Favorite point. I don't know why. Because they have given correct. Now you will do wrong. Are you getting why they have given correct? Because they know that you will do something. So they want you to do something wrong. Understood? So other non-current asset 2 lakh consists of capital advance. It is correct only. No adjustment required. Other current asset include 3,50,000 current asset receivable in cash. So this become financial asset, and prepaid expense, this is non-financial asset. So other current asset कहाँ पर? यहाँ पर. Other current asset. Write on point number 4. I hope you are understanding. Correct. Then short-term provision include dividend payable of rupees 2 lakh. The dividend payable had been as a result of board meeting when the declaration of dividend for the financial year was made. However, it is subject to approval. Means we can't recognize proposed dividend. So this is also bakwas. So short-term provision we should de-recognize what? Dividend payable. So short-term provision is where? Short-term provision. यहाँ पर write on point number 5. Done. Now this all point has been given for reclassification. Means abhi right now we have not taken any exemption. We have not taken any exemption. Now they will give some adjustment for exemption. Understood this point? Correct. Means believe me, this question come. It is a matter of only 10 minutes if you have understood the question. Correct. But you can score, and you can score 16 out of 16 if you have done it perfectly. But it can be done only when you have done revision before exam. Correct. So we should pray God that this type of question should come. CFO of Soria Limited has present the following information. PP consists of the class of asset as office building whose carrying amount is 10 lakh. However, the fair value of said building on the date of transition is estimated 15 lakh. Company want to follow revaluation model. But will take carrying amount or fair value, and this 5 lakh will be transferred to revaluation surplus. So point number, once again point number A. Point number A. So PP will लिख दो point number A. Point number A. Understood? चलेगा. तो you will increase by 5 lakh and that 5 lakh will go to what? Revaluation surplus. Then the fair value of intangible asset as on the date of transition is estimated to be 2,50,000. However, the management is reluctant to incorporate. But will you do anything? No. Ignore. Ignore. Don't do anything. Just cross it. Cross it. Dekho, if you are not crossing it now, again you read. Again some time will be wasted. So you are wasting your 2 times now. One information you are wasting reading 2 times. So just cross it. Means now you are not supposed to read it again. Have you understood this point? Yes sir. Soria Limited ऐसे काट दो, ऐसे काट दो. Soria Limited. और क्या? ठीक तो बोल रहा हूँ. ठीक है. Soria Limited acquired 80% shares in a company except private limited few years ago, thereby acquiring control upon that. Soria Limited recognized goodwill as per accounting standard by accounting in the excess. Okay. But the fair value exercise was not done at the time of acquisition. Now whether they have stated about retrospective application, whether they have given fair value of IND on the date of acquisition, nothing is given. Can you restate on retrospective basis? It means you need to apply what? On prospective basis means as per previous gap means kata laga. Are you able to understand? Only read and kata, no adjustment required. Simple or not? Means this question will be in 3 pages, but answer is what? Super easy. Super easy. And believe me, one time to pakka they will ask. We don't know which attempt, but this question is going to come. Likh lo mera words. I don't know which attempt, but one attempt they will ask this question, which will be jhatka. Everyone say out of book. That will be jhatka, 100% jhatka. Correct na? Are you getting what I am saying? So be prepared for this type of questions. Be prepared. Trade receivable include an amount of 20,000. Iska jawab dena. As provision for doubtful debt, measure in accordance with previous gap. Now as per latest estimate, the provision need to be revised to 25,000. But is there any error? Was there any error in previous estimate? Correct now. And can I say now they have given now as per latest estimate. So latest estimate means what? As on the date of application. This is not on the date of transition. This estimation is as per what? Not on the date of transition, because right now we are not standing on date of transition. On the date of transition this, but right now we are standing where? In 1920 now. So that estimation is not required. So can you say it was if nothing is given, it will be consistent as by India's also na. So therefore no adjustment required for estimation also. So kanta laga. This also kanta laga. Read and leave. Read and leave. Suppose they have given yes there is an error, then that adjustment is required. Understood? Correct. The company has given a loan of 1 lakh to an entity for a tenure of 10 years 6 years ago. Transaction costs were incurred separately for this loan. The loan carries an interest rate of 7%. The principal amount to be repaid in equal installment over a period of 10 years at the year. Interest is also payable at the end of each year. The fair value loan on the date of transition is 50,000. But this loan given is what? A financial asset. Loan given is a financial asset. And now the fair value is what? 50,000. Carrying amount is what? 40,000. But the financial asset will take carrying amount of fair value. Fair value will take. So batao what they have given loans, loans advance, loans. Okay. So this just give which point number? Point number E. So in this there are 2 points, point number 2 and point number E. Are you able to understand? This is only the best method. Now when you will come to this point, just see 2 and E. You will never miss it now. Are you getting what I am saying? Because you will forget what you have done for which point. And normally because of that reason we take more time. This is the only best way to take less time. Got this point? Correct. Next point. However, Ind AS 109 mandated to charge interest expense as per effective interest method. This all are bakwas, because effective interest rate is required for subsequent accounting and that is not relevant for this question. Chalega? In the term of long-term borrowing, 4,50,000 component is due to our state government, interest payable on the government at 4%. However, the prevailing rate of interest is 8%. The fair value of such loan is 4,20,000 as on the relevant date. Batao whether now they have given, however, the prevailing rate of market interest rate means this is the market rate of interest as on today. They have not given market rate of interest as on what? When the loan was taken. Means can you follow retrospective accounting? You can't follow retrospective accounting. It means loan will be equal to what? Carrying amount as per previous gap. Means no adjustment. काटा लगा कितना पॉइंट दिया है? GH. H means how much? 1 2 3 4 5 6 7 8. 8 के बाद यहाँ पर भी था. 8 में 1 2 3 4. 4 point is not relevant. अभी तक 2 points are left. Are you getting? So they will check your presence of mind. This will be lengthy question. Leave. If you have not done this question before exam, and if you have done it, can you see you will take less time for reading also and doing also. Smart work समझो. It is not कि consolidation कितना करना है. It is not कि business combination कितना करना है. That is not smart work. You waste your time in doing that chapters. I am not saying leave that chapters, but you practice more question there, and you don't practice this chapter. There is only loopholes. Under previous gap, the mutual fund were measured at a cost of market value which was lower. Under Ind AS, the company has designated this at fair value through PA. The value of mutual fund as per previous gap was 2 lakh, included in current investment. However, the fair value, so of course you will take it fair value to 2,30,000. So G, point number G, because it is also financial asset. Financial asset will come at what? Fair value. The current investment. Write down point number G. Correct. Ignore separate calculation of deferred tax on above adjustment. Assume that net deferred tax income to be 50,000 on account of Ind AS. So deferred tax income is DTA or DTL? DTA or DTL? Either increase in DTA or decrease in DTL. So let's see what is given. DTA दिया, DTL दिया. So they have given DTL. So you need to minus now. minus by which point? Point number h. Write down point number h. Now this becomes super easy question. But they have asked, they also Kirana, because they will give 60 marks. So they will give prepare balance sheet. This is a game of what I will say 10 minutes. But they have asked so necessary explanation of each item presented. I will say write down only 2 to 9 in your own words. If you see they have given explanation, कि महाभारत दिया है. अरे what do you think about ourselves? Baba, we are not expert in English. We are not writing English exam na. And they don't expect also this much from us. Believe me. They don't expect. Because this is suggested solution. Na. So if I am writing solution, so I write on perfect because that is seen by everyone na. If you ask me, sir, give me solution, so I will write on very clearly because it will be seen by everyone. You will try to think about me also. How is that teacher? So I'll give perfect solution. But in exam, that much perfection is not required. So I will say just write down in your own word. Exemption able, not exemption, like this. As per IND AS 101, bas, likh do. Jai Mata Di. Understood? Now this balance sheet will not take much time. You can see all adjustment they have done. The first they have done here reclassification. Reclassification is done यहाँ पर. Reclassification is done यहाँ पर. Because financial asset will go to what? Financial asset. Another will go to other current asset like this. ठीक है ना? Then they have done this adjustment. I will always suggest after adjustment retained earning always take as a balancing figure. Means this other equity always take as a balancing figure. So other equity always take as a balancing figure, and if the time permit, prepare this working note. How this other equity came? Means minus plus minus plus. Whatever adjustment you have done, that will go to what? So if the time permit, prepare one working note for this. Simple. So this is solution. Now you can do it. It is not difficult, but I have just read this question to inform you that how to read that question. How to read that question. I just try to understand. Suppose the same question came in exam. Will you read or will you not read? Suppose you have done this question just 1 hour before. Same question came. Will you read or will you not read? Yeah, you read. Because some point may change, na. You have that fear. You have that fear, na. Correct. You read. Then also you need to read. But how to save time, that you need to understand. So of course you read. Every question you read. Got this point? Even though if I'll give the question paper just 5 minutes before now, and I say this question paper will come, 1 hour before, then also in exam read question paper, because you want surety whether the same question paper is there or not. You read entire question. Correct? Chalo. My job done for IND AS 101. Now let us come to 34. 34 let us complete fast. 34. This is very simple. Thirty-four. Interim financial reporting. Now, interim financial reporting means what? Any financial reporting for a period less than full financial year. Means if you are preparing any financial reporting for a period less than full financial year, it become what? Interim financial report. Now they have given one clarification that first annual financial statement can be for less than 12 months, but that is not interim financial report. The first annual financial report is not a interim financial report. Now, what is the objective of this chapter? The objective of this chapter is not to mandate interim financial report. Achha, whether preparation of interim financial report is mandatory? Whether it is mandatory? It is not mandatory. It is not mandatory as per any act also. SEBI has done mandatory on limited review, that is interim financial result, but we are discussing about interim financial report. Interim financial report and interim financial result are two different points. Result means only SOPL, but here we are talking about interim financial report containing a complete or condensed set of financial statements. So interim financial report may consist of either complete or condensed set of financial statements. Now when I am saying complete means complete balance sheet, complete SOPL, complete SOK, complete statement of cash flow, and complete notes to account. But when I say condensed, it will be condensed financial statement. All will be condensed. Now the question arises of what will be the content of complete or condensed set of financial statement. So they have just given one clarification. If it is complete set of financial statement, then it will be as per annual financial statement. Means the way you are preparing your annual financial statement, in that way you need to prepare what your complete set of financial statement. But they do not encourage complete financial statement. They always encourage what? Condensed set of financial statement. It does not mean you can't prepare complete set of financial statement. It is a choice of what entity to whether go for complete or condensed set of financial statement. Now if you have opted condensed set of financial statement, then the statement shall include heading and the subtotal included in the most recent annual financial statement. Means only we take heading and subtotal. Heading means we can write down this way: asset, then non-current asset, then current asset, then liability, equity and liability, equity, non-current liability and current liability. Only this heading is required. Understood? Correct. And the subtotal. However, they have given one more clarification that additional line item may be also included if their omission will make the financial statement misleading. So additional line item can be included if their omission will make the financial statement misleading. However, they have given one clarification whether it is complete or condensed set of financial statement, basic and diluted earning per share need to be disclosed. So whether it is condensed, whether it is complete, present, basic and diluted earning per share. Now one doubt will come, sir, if the parent is preparing consolidated financial statement. Understood? So whether means if the parent is preparing interim consolidated financial statement, whether separate financial statement is required. So Ind AS 34 is silent regarding this. Ind AS 30 means this standard neither require nor prohibit the inclusion of parent separate statement in the entity's interim financial report. Understood this point? So Ind AS 34 is silent regarding that point. Now what is the minimum? Means if you see the condensed, so condensed financial statement will be having some selected explanatory notes. Selected explanatory notes. So some minimum information required. This you read by roll. Minimum information is required. So there are 10 sub points which need to be disclosed as a minimum point in what condensed set of financial statement. Chalega? Yes, sir. Then period for which interim financial statement are required to be prepared. This has been divided in two parts, for non-seasonal business and for seasonal business. When I say for non-seasonal business, what they want to say, just try to understand. Suppose this is what? Previous year and this is current year. And we have 4 quarters. How many quarters? 4 quarters. And let us assume this is our interim period. We are preparing interim report for quarter 2. We are preparing interim report for quarter 2. Now balance sheet, they are saying for non-seasonal business we require 2 balance sheet. One as on this date, one as on previous year end. Not this, this not. This. Understood? So there will be 2 balance sheet. 2 balance sheet. Correct. Then there will be 4 SOPL. How many SOPL? 4 SOPL. One is for current period. One is for corresponding quarter. Means quarter 2. And one will be for year 2 end. Year 2 end. 4 SOPL. Then 2 SOK and 2 statement of cash flow. 2 SOK and 2 statement of cash flow. That is from year to end and year to end. This is understood. If it is non-seasonal, if it is seasonal, then more comparison is required. So if it is seasonal, it will add one more balance sheet as on this date also. We'll add 2 more SOPL, means 12-month ending SOPL is also required. 12-month ending SOPL is also required. And 2 more SOK and SOPL we added, that is 12-month ending. 12-month ending is also required. So in case of seasonal, there will be 3 balance sheet, 6 SOPL, 4 SOK, 4 statement of cash flow. Understood? However, if in exam this type of questions come, we should write down in this way. If question is silent, always go for non-seasonal business, don't go for seasonal business. If question is silent, assume it is non-seasonal business, answer as per that. Answer as per that. Chalega? Yes, sir. Then recognition of measurement of income tax. This is important from exam point of view. Recognition and measurement of income tax. So what they say, ki first calculate weighted average tax rate. That is also known as effective tax rate. Effective tax rate, which will be equal to, first you need to estimate tax expense divided by estimated accounting income of the entire means full financial year. We do estimation for full year. So if you are in quarter 1, you are calculating tax expense of quarter 1, so you need to estimate the income of entire year. You need to estimate a tax expense of entire year and then multiply by 100. This become what rate of tax? Effective rate of tax. Correct. Now tax expense will be current tax plus minus what? Deferred tax. Current tax plus minus deferred tax. Once you got effective tax rate, just find out the actual accounting income of that quarter multiplied by year. That will become tax expense of that particular quarter. Tax expense of that particular quarter. This is the way to calculate tax expense. However, one question I would like to take, which is very much popular from exam point of view. This question, ABC Limited present interim finance report quarterly. On 1/4/2001, ABC Limited has a carry forward losses of 600 lakh for the income tax purpose, for which DTA has not been recognized. For which DTA means last year DTA was not recognized. Okay, then last year DTA was not recognized. So when you have used it, then there is no need to reverse it. There is no need to reverse it because last year DTA was not recognized. ABC Limited earned 900 lakh in each quarter, and excluding a carry forward losses, income tax rate is expected to be 40%. Calculate the amount of tax expense to be reported for each quarter. The first you need to find out ETR. ETR means effective tax rate. So first find out tax expense. But what is your accounting income? 900 into 4. How much? 3,600. What is the carry forward losses? So what is your taxable income? What is the current tax? 40%. What is the deferred tax? And deferred tax will be 0. Why? Because it was not created. DTA was not created. The question of reversal will not arise. If suppose DTA was created last year, so we should reverse the DTA in the current year. Understand what I am saying? So it means your tax expense will be equal to what? 1200. Correct. So your ETR, effective tax rate, will be what? 1200 divided by 3600. This also be careful. Divide by accounting income, not by taxable income, into 100 is equal to what? 33.33%. And then you can apply this on each quarter accounting income. So each quarter accounting income was 900. So 900 into this, like this. That become what? Tax expense of each quarter. This is one of the favorite questions. One more question they ask with capital gain. Means they will give some other income. For other income they will give slab rate. And for capital gain they will give 20%. So when you are calculating effective tax rate, so don't consider this. Calculate effective tax rate for income other than what? Capital gain. Because for capital gain you are applying what? 20%. Understood? So first find out other income excluding what? Capital gain. Then calculate effective tax rate. Then apply that effective tax rate only on other income, not on capital gain. This also one question is favorite. I think this type of question you have done also. Correct. Done. This also done. Now the last point of this chapter is recognition of revenue and expense. This is also important. What they said, there are many revenue which occur on seasonal or occasional basis. There are many income or revenue which occur on seasonal or occasional basis. So how to recognize that revenue in the interim period? So what they want to say, revenue that are received seasonally or occasionally within a financial year should not be anticipated, or should not be deferred. Correct? If anticipation or deferral would not be appropriate at the end of financial year, means if you can't anticipate or if you can't defer at the end of financial year, So for that particular interim period also you can't anticipate. For example, any dividend income you have received in second quarter, can you defer it to next year? No. So it cannot be deferred to the next year at the end of financial year. Therefore, their deferment or anticipation is not permissible. Means dividend income is recognized in the period in which it has been received. But there is some, suppose government grant, you receive a grant income. Can you defer grant income at the end of financial year? Can you defer grant income at the end of financial year? Yes, as per IND AS 20. Therefore, if you receive grant in quarter 2, you can defer in quarter 3 and quarter 4 also. Understood? Correct? Yes, sir. Similarly, same thing is given for expense. Any expense which is incurred unevenly during the financial year should be anticipated deferred if the anticipation or deferment is permissible at the end of financial year. If you can anticipate or defer at the end of financial year. For example, can you anticipate any provision at the end of financial year? Yes. Therefore, for every quarter you can anticipate what? Provision. So provision for gratuity can be recognized. Provision for any other liability can be also recognized. But can you defer advertisement expenses? No. Therefore, if any advertisement expense has been incurred in quarter 3 for the entire year, can you anticipate for quarter 1, quarter 2? Can you defer to quarter 4? No. It cannot be anticipated. It cannot be deferred. Correct. Changes in accounting policy and changes in accounting estimate. This is also important. Let me try explain with one example because this is important. Suppose this is previous year and this is the current year, and this is our current interim period. In this you have done one changes in accounting policy. Changes in accounting policy. And because of that changes in accounting policy, suppose you have changed inventory valuation method. And because of that reason your inventory increases from, suppose you have changed from FIFO to weighted average price method. And inventory increased by 10 million for this quarter, 20 million for this quarter, 30 million for this quarter, 40 million for this quarter, 50 million for this quarter, 60 million for this quarter, and total become how much? How much? 110 million, 210 million. So this become total effect. Now the question is that if there is any changes in accounting policy, so for this period you will give how much effect? You will give 60 million to 210 million. Understood the point? Have you understood the point? There was some changes in accounting policy in the current interim period, and the effect I have given, effect of all previous quarter, effect of all previous quarter. So how much effect will be given in this current? 60 million ki 210 million? कुछ भी बोल दो यार. ऑप्शन ए ऑप्शन बी नो नेगेटिव मार्क्स. साइलेंट रहे. I am asking something, no negative mark, no positive thing. 60 million or 210 million? So 60 million is correct. So I said when you answer you will give correct answer. Just give answer because that will motivate you. That will motivate you. So 60 million is correct. But if I'll change the question, तो change करते हैं. Now suppose SLM has been changed to RBM. Quite possible. In this case also suppose the same effect is there. Now increase in depreciation दिया हुआ है. Increase in depreciation for every quarter. तो बताओ how much will charge? 60 million कि 210 million? SLM RBM. Now it will be 60 कि 210? Now 210. Why it is 60 and why it is 210? Because this is changes in and this is changes in accounting estimate. So what they want to say, changes in accounting policy only will give the effect related to current period, but changes in accounting estimate, because it is prospective accounting, entire effect will be given in the period of change. This was one of the favorite questions the institute can be asked in MCQ format also. So be careful about this point, changes in accounting policy and changes in accounting estimate. Chalega? Understood? Yes sir. So that is only given the effect related to current interim period should be recognized in the PL of the current interim period. But for accounting estimate entire effect will be given in the period of change. Now reversal of impairment loss, you can see the last point of this chapter. One MCQ was given in ICAI, this MCQ was given. 1 marks MCQ, last point. Now suppose, what they want to say, suppose this is the quarter. In this quarter you have done one impairment testing and goodwill was impaired, the total goodwill was impaired. Now in the next quarter there was some reversal indicator. Can you reverse the impairment of goodwill? No. Even though reversal happened in the same accounting year. Understood? So they have just given a clarification, entity shall not reverse an impairment loss recognized in previous interim period in respect of goodwill. Done. In day 34 also done. In day 34 I think few questions are given and they will ask that question only. Do all the questions whatever given, they will not create new questions. Okay? Understood? In day 34 done. Only one part is left, that is what? In day 116. We'll take 10-minute break. Chalo. Now, can we start again? Now, everyone, the last topic for this marathon is sale and leaseback transaction, which was left when I was doing IND AS 116. Now, sale and leaseback transaction, what they want to say that an asset which will be sold, an asset has been sold, and then that asset has been once again taken on lease. Okay, so asset has been sold. So asset has been sold and the same asset has been taken back on lease. So this is known as sale and leaseback transaction. Now just try to understand what IND AS 116 want to say that there are two transactions, sale and leaseback. Sale and leaseback. Now lease can be what? From the point of view lessor, means in this topic the seller will become lessee and the buyer will become lessor. So from the point of view of lessor, it can be finance lease, it can be operating lease. But from the point lessee, there is no concept of finance lease or operating lease. Only the point is that when the sale has been done, whether it will meet revenue recognition criteria as per IND AS 115. If it will meet the revenue recognition criteria as per IND AS 115, then it is only a sale. Otherwise, it is not a sale. So what they want to say is just see whether the control has been transferred. If the control has been transferred, then it will be regarded as a sale. Otherwise, it is not a sale. So what they want to say, if this transfer is not regarded as sale, why? Because the control has not been transferred, then it will not be accounted as a sale transaction. This will be accounted as a no, I am saying about sale. Lease to is second part. Understood now? It will not be accounted as sale. It will be accounted as a financing transaction. Therefore, whatever consideration received by seller will be a financial liability, and whatever consideration paid by buyer will be a financial asset. And apply IND AS 109 to financial liability and financial asset. Means this chapter is not at all applicable only. This chapter is not at all applicable. Neither IND AS 115 is applicable nor IND AS 116 will be applicable. IND AS 109 will be applicable. So in that case, in the books of seller, what journal entry? Bank account debit to financial liability. In the books of buyer, financial asset account debit to bank, and to that financial liability and financial asset apply IND AS 109 by applying amortized cost at EIR. Understood? Means no discussion about that. Means only we do discussion when sale is regarded, when the transfer is regarded as sale, and when control has been transferred. So that topic we need to understand from this chapter point of view. Understood? It means first transfer is regarded as sale. If the transfer is regarded as sale, then only we'll discuss this point. Means can I say normally when it is a financing transaction, that type of question they will not ask, because that is a question based on what IND AS 109. So if they ask, apply IND AS 109. Understood? So first point what you need to ask, whether transfer is regarded as a sale. If yes, now you need to ask one more question, whether sale has been done at market terms. So sale may be done at market terms or sale is not done at market terms. If sale is done at market terms, then no adjustment required. No adjustment required for that sale price. So no adjustment required if sale price is equal to fair value. But if it is not done at market terms, means sale price is not equal to fair value, then there can be two situations. Either sale price is more than fair value or sale price is less than fair value. So whenever sale price is more than fair value, it means we are receiving more amount from whom? Buyer. So whatever additional amount we are receiving over and above fair value, that will be considered as additional financing received from whom? From buyer. So that extra amount will be considered as financial liability in the books of seller and financial asset in the books of buyer. Understood? This is known as off market adjustment. But if sale price is less than fair value, If sale price is less than fair value, means if the fair value is 10 lakh but you are receiving only 9 lakh, you are receiving only 9 lakh, so whatever the difference is considered as prepayment, is considered as prepayment regarding lease, is considered as prepayment regarding lease. For example, just try to, when I am talking about this asset, just try to understand. Correct. Now I receive this calculator from you, so I become what? Buyer or seller? Buyer. उल्टा कर देते हैं, ठीक है ना, कि I have sold this, चलो ठीक है, I have sold this asset to you. Correct. Now, so I will receive some consideration, and the fair value of this calculator is, let us assume, 1000 rupees, but I am receiving 900. So sale price is less than fair value. So how much less amount I am receiving? It means this amount I have already paid towards what? Lease transaction. So this is known as prepayment for lease, and any prepayment for lease which has been done before commencement date, it will be adjusted to ROE asset. It will be adjusted to ROE asset. Understood this point? So this is known as off market adjustment. Once you have done off market adjustment, then we'll go to what? The accounting treatment. Now we need to find out what will be lease liability, what will be ROU asset. First, this much have you understood? Now in ICAI book they have only one question of this nature. They have not created any question of this nature, so we assume they will ask this only. When sale price is more than fair value, sale price is more than fair, but be careful, if suppose reverse is there, so that will be prepayment, and that prepayment will be adjusted to ROU asset. Understood this point? Correct. Now we'll take one question to understand what adjustment is required. So I'll just explain from step wise, because that question is only important. Same to same question will be asked in exam if they ask. Correct. So come to IND AS 116 45. Overcharge over here. What the question has given? An entity sells a building to another entity for cash of rupees 30 lakh. This becomes sale price. Immediately before the transaction, the building is carried at a cost of 15 lakh. At the same time, the seller or lessee enter into a contract with buyer or lessor for right to use the building for how many years? 20 years, with an annual payment of 2 lakh payable in the end of each year. At the end of each year, the terms and conditions of transaction are such that transfer of building by seller satisfy the requirement for determining when performance obligation is satisfied. In IND AS 5, means it is regarded as a sale. Understood? The fair value of building is how much? So the sale price is more than what? Fair value. Initial direct cost, ignore, thank you very much. Interest rate implicit in a transaction is 12%, which is readily determinable by seller or lessee. Buyer lessor classify the building as an operating lease. It can be finance lease also, but operating lease, finance lease will be same accounting whatever you have done in your IND AS 116. How should the said transaction be accounted? By seller or lessee or buyer or lessor? We will understand step wise. So first, what is the step number 1? Step number 1 will do off market adjustment. Compare sale price with fair value. So sale price is given how much? Fair value is given how much? Difference is what? So difference will be known as additional financing received from buyer. Correct. First step you understood? Correct. If suppose this is 27, this is 30, so this 3 lakh will be prepayment, and which will be adjusted to ROU asset. Second step is what? Calculation of lease liability. Calculation of lease liability. Now whatever 2 lakh is the payment, but that payment is for 2 points. One is for lease, one is for finance. So that becomes total liability. First we will calculate total liability. So first find out total liability. That will be present value of annual payment at the end of each year. That is for how many year? 20 year. Rate of discount given, you are champion in that, you can find out. So 2 lakh present value factor, this will come the amount will come, this become total liability. But out of this 14,94,000, okay, 3 lakh is financial liability. 3 lakh is financial liability. The balance is what? Lease liability. So out of 14,94,000, 3 lakh is financial liability. The balance will become what? Lease liability. Lease liability is how much? 11,94,000. Correct. It means 2 lakh whatever you are paying, some portion you are paying for loan and some portion you are paying for lease. So that 2 lakh will be also allocated to loan component and lease component in the ratio of fair value of liability. In the ratio of fair value liability. So allocation of annual payment, understood? Allocation. Third step is what? Allocation of annual payment. Lease component and loan component. Fair value is 11,94,000 and 3 lakh. What is the total payment? 2 lakh. So 2 lakh will be allocated in this ratio. So how much you are paying for lease? How much you are paying for loan? This you can do. Up to this, so no doubt. Correct. Now the fourth step is what? Measurement of ROE asset. Measurement of ROE asset. Now what Ind AS 116 says that, just right, I'll just explain. Suppose this is seller, this is buyer, and the economic life of the asset is, because economic life is not given, just try to understand what I am saying, is 50 years, and you have given this asset, you have sold this asset, and once again you have taken this asset for how many years? 20 years. It means out of 50 years, once again you have taken this asset for how many years? Means you have transferred the right only for how many years? 30 years. It means you have retained the right for how many years? So whatever right you have retained, that is ROE asset for how many years? 20 years. Understood? So that will become your ROE asset. So what they want to say, the carrying amount, the total carrying amount of that asset, whatever has been retained portion, for that you can't recognize any gain or loss. So any proportionate carrying amount for the retained portion, can you recognize any gain or loss? No. Only proportionate carrying amount which has been allocated to the right which has been transferred, that is for 30 years, on that only you can calculate what gain or loss. So ROE asset will be proportionately measured. ROE asset will be proportionately measured. Proportional to what? Carrying amount. What is the carrying amount of the asset given? The carrying amount of the asset given in the question is 15 lakh. 15 lakh. So this 15 lakh will be allocated for the right retained. 15 lakh will be allocated for the right retained, and that will become what? ROU asset. So on what basis it will be allocated? So can you say, just trying to understand. There is one underlying asset building and there is one ROU asset. What is the fair value of underlying asset? 27 lakh. What is the fair value of ROU asset? Okay, fair value of ROU asset will be equal to lease liability. So this becomes fair value of what? ROU asset. What is the carrying amount of underlying asset? 15 lakh. Now can you find out what is the carrying amount of ROU asset on proportionate basis? On proportionate basis. Understood this point? One second. What is the fair value of building? 27 lakh. What is the fair value of ROU asset? That is nothing but whatever you are paying. That is, you are paying how much? 11 lakh 94,000. What is the carrying amount of building? 15 lakh. Now this 15 lakh will be allocated this portion on proportionate basis. So if you know unitary method, what you will do? This multiply by this, divide by what? 27 lakh. So this multiply by this, divide by what? 27 lakh. This become one formula. This become one formula. So can I say in this way, the carrying amount of ROE asset will be equal to, means ROE asset will be measured at an amount equal to carrying amount multiplied by lease liability divided by what? Fair value. So this become one formula to measure what? ROE asset. So what is the formula? Batao. Carrying amount multiplied by lease liability divided by fair value. या तो याद कर लो या तो मैथमेटिक्स लगा लो. This is mathematics ना. If you are good in mathematics, so rectification is not required. If you are bad in mathematics, then rat lo. What is the formula? Carrying amount multiplied by lease liability divided by fair value. This is what the value, this is the carrying amount allocated to ROE asset on a proportionate basis. Correct? Understood? So this become what? Step number 4. Now coming to step number 5, we'll find out gain or loss on right transferred. Gain or loss on right transfer. First we'll find out total gain. Total gain will be calculated by comparing fair value and carrying amount. What is the fair value of the asset? What is the carrying amount? This become total gain. This become total gain. Out of this, we'll find out the gain allocated to ROE asset which have been retained, that will not be recognized. So same formula will do. 12 lakh multiplied by 11 lakh 94,000 divided by 27 lakh. So this is the gain on right retained which will not be recognized. Gain on right retained which should not be recognized. So out of this will not be recognized. So how much will be recognized? This will be transferred because this is the gain for the right which has been transferred. 6,69,333. Understood? If you have understood this much, so you can pass journal entry. Having this becomes step number 5. Now what will be journal entry in the books of seller? First journal entry bank, but how much you have received? I am just giving compound journal entry. How much you have received? 30 lakh. Out of that, what is your financial liability? 3 lakh. What is your lease liability? How much carrying amount of building D recognized? What is the ROE asset recognized? And the difference will be what? Gain. Understood? Once again, bank you understood? 2 building, 2 lease liability, 2 financial liability, and ROE asset will be debited with the amount calculated, and the difference will be gain or loss. So gain or loss is balancing figure, which is nothing but this amount. Means even though you have not calculated this amount, this will automatically come with as a balancing figure in the journal entry. So there is no need to calculate, but calculate it because you will get 1 mark for that. Understood? So this is nothing but balancing figure in this journal entry. Balancing figure in this journal entry. Can you say after this actually they have not asked, but after this also we can do. Now can you say we recognize interest expense on this? We recognize interest expense on this by using the same rate of interest. Same. So interest for interest expense account debit lease liability to financial liability. So why you are making 2 liability? Why not only 1 liability? Because as per format, means as per balance sheet format required, lease liability is shown separately than borrowing. So this become borrowing, this become lease liability. We need to find out how much lease liability and how much borrowing. Then can I say payment will be done? So lease liability, how much payment? This allocation already we have done. Lease payment, lease liability borrowing, to total payment is 2 lakh. Done. Depreciation on ROE asset based on their lease term. Depreciation also we can do. Then in the books of buyer or lessor, case building has been acquired at what amount? What is the fair value? 27 lakh. How much paid? 30 lakh. The balance will be financial asset. Financial asset means loan given financial asset. Correct. Now can you say on this, in this will apply 109, but in this will apply, sorry, not the balance means whatever the lease portion on that, because it is an operating lease, we recognize what will apply what IND AS 116 operating lease. So as per IND AS 116, the total lease payment will be recognized as a lease income over the lease term. So we need to find out total lease payment. Total lease payment. What is the annual lease payment? It is 1,59,840. Allocated amount, na? 1,59,840 allocated amount. We will receive for how many years? 20 years. Divide by 20 years. Same amount will come. Same amount will come. So what journal entry will do? Once the amount is received, key bank account debit to lease income. Bank account debit to lease income. Understood? Now for loan, what journal entry? Bank account debit to interest income to financial asset. Interest income will be calculated by applying rate of interest, means EIR. Then on building, can I say will charge depreciation based on the useful life, but that useful life is not given, therefore we can't calculate depreciation. This become accounting treatment in the books of buyer or lessor. Perfect question from exam point of view, already asked in exam, can be again repeated in exam. I hope you have understood. Correct. Only you can do mistake in this point. This point. So do calculation correctly. This point. Understood? So think in this way. Think in this way. What is the fair value of building? What is the fair value of ROE asset? What is the carrying amount building? So this you can find out on what? We could say na cross multiplication unitary method बचपन में, the same thing, mathematics. चलेगा. IND AS 116 also done. So from my point of view, I have done my job by taking all the points, all the chapters into consideration. Now what will be your duty? What will be your duty? You do all the question as soon as possible. Content revision तो हो गया. Now don't focus on content if you have listened carefully. If you have already listened carefully, huh? So now don't give much time on what? Content. Give more time on what? questions. But then also I will suggest you, normally what happen, when you do questions, question, then you don't give importance to concept. Understood what I am saying? So my suggestion is what? Suppose you are doing consolidation chapter. I'm just explaining what consolidation chapter. So don't start doing question directly. Now, if you start doing question directly now, so it can be from any concept. It can be from any concept now. Then you are not able to link with that concept. And that time what happened? The question is actually based on one point. Second point, that question you have not done. So you will not able to recall the second point. Are you getting? Suppose that concept has 2 points, but question has given only for 1 point. Question has not given for second point. So that time you will not be able to recall what? Second point, and that actually is not correct. So what I will suggest, when you are doing practice, first do concept wise. Suppose you have done concept number 1, do some question based on that. Then concept number 2, do some question based on that. Do question number 3, concept number 3, do some question based on that. Then once the entire concept done, and you have done few questions based on that, so it means conceptually you have understood the chapter. Now all the balance question, whatever left, do very fast. Fast means what? When I say fast, so you need to, what you should do? You should read question, read solution. Means this question now, this question, when you are doing conceptual question, do some question with writing also. So when you are doing writing, so you are also understanding the writing requirement in exam. But when you are doing balance question, means the balance question means whatever question has been left after doing all the conceptual questions. Suppose chain holding, you have done 1 question. The balance question are 2 questions. So once again, now don't do by writing. I will say just read the question, do it very fast. Either by reading solution or by calculating in some way, or reading means just do calculation. So that will be fast revision. While doing that, while reading that question or doing that question or solving that solution, whatever, you may come with 2 points. Either you have understood entire question, then there is no need to refer again, or you have not understood that question either partially or fully. This is very rare situation. Fully you have not understood, this is very rare situation. Very rare to rare. Means only that there is some question you have not understood partially. When I say partially, it is quite possible one para you have not understood. So for that you need to go to a solution and you understand what is this. So that type of question you highlight. Highlight that point, highlight that question. And that question or that point which you have highlighted requires second reference. Means when you do second time revision, either before exam or one more revision, whatever you have planned, that time you need to again do that question. Understood? So in this way what will happen, you will take less time for solving all the questions. Correct. Now just try to understand once again. MCQ based question does not require more practice. Why? Because MCQ based question will be based on content. If you have gone through content, so how much MCQs you will do? So I will say only restrict yourself to MCQ based on whatever I have given. Only that much. Or if you are following some other faculty, to restrict up to that MCQs only. Don't do unnecessary more practice in MCQs. Because believe me, all MCQs will be totally new in exam. That depends upon how you are reacting in exam hall. So multiple practice for MCQs is not required. Multiple practice required for big questions. So that you need to identify which question require practice, which question does not require practice. In that also I will just suggest you that whenever you are getting whenever you are doing consolidation chapter or business combination chapter or financial instrument chapter or IND AS 115 chapter, whatever big chapter, in that chapter do some question with time limit also. Means set your target. This question I need to complete in 40 minutes or 30 minutes and do in that way. So that will help you to understand whether you are able to complete that question in 30 or 35 minutes or not. Suppose the first time you have taken 45 minutes, it means you need to again increase the speed. So write down that you have taken 45 minutes. So next question you need to reduce your time. So 45 minutes is not correct. It should be either 30 minutes or less than 30 minutes. Any big question. Any big question. Correct. Understood? Correct. Now, one more point I just like to say. This too you have understood. Okay. One more point. Okay. About the time management. About the time management. This is also most important from examination point of view. So what I used to do, I'll just inform you that only, and I think you must be knowing and you might be following that also. Correct now. But the best way is what? You have how many minutes? 180 minutes. Correct. Out of this, make a provision of what? 20 minutes. This 20 minutes is for worst question, where you will take more time. That you don't know which question will take more time. So you have only what? 160 minutes. Means in your mind, it should be from the beginning that you have only 160 minutes. So for 100 marks paper, you have how many minutes? 160 minutes. It means for 1 marks you have what? 1.6 minutes. 1 marks you have 1.6 minutes. It means if any question of 60 marks, so multiply with 1.6. So when you are doing a 60 marks question, this homework you should do before exam only. You should know that 60 marks question, this much minute is required minimum. Understood? Correct? Minimum, sorry, maximum. Maximum. Na maximum na. So it is what? 25 minutes. So for 60 marks question, you have only 25 minutes. And then start doing. Now normally what happens, you don't know about time requirement. मजा आ रहा, लिखते जा रहा. And initial question, so you write in good handwriting. You think that you want to write in good handwriting. You don't know how much time has gone. So from the first question, don't think about handwriting. Think about presentation. Think about presentation. And your target should be that 60 marks question should be done in 25 minutes. Now suppose 25 minutes over. Now there can be two situations. Now can I say, as a student, you know whether you will be able to complete or not. Now you know, gaya, khatam. Leave it that moment. Don't become emotional fool now. Leave that question that moment. You have understood कि ना नहीं हो रहा है. Correct. But if you think that if you require additional 5 minutes, yes, 7 minutes, you will be able to complete it. Whether wrong, correct, that you don't know, huh? That time you don't know, na, but you can complete it. So you have that 20 minute na buffer. You can take. If that is coming in your mind, yes, you can complete it by taking more 5 minutes. So you have buffer. Take it and complete it. Don't leave that moment now. So that is what your presence of mind, how to react in exam hall. How to react in exam hall. So these all are also important. These all are also important. Not only in FR paper, this will count in every paper. Whether it is theory, then also you need to do in this way only. Because the objective is to complete what 100 marks paper. One more thing, whatever 50 minutes you get na initially, reading time 15 minutes. This 15 minutes is also very important. How you use the 50 minutes? कैसे use करते बताओ? Decide the order of writing. अच्छा, decide the order of writing. So how you will decide the order of writing? Huh? Based on the chapters. So it means you will read entire question paper. Can you read entire question paper in 15 minutes? बकवास point. Impossible. Next first question 15 minutes लग जाएगा. If you start reading only question number 1 now, it will take more than 50 minutes because that time to know, because you कहाँ से करना वो अलग बात है. आप तो पहले डिसाइड कर लिए क्वेश्चन नंबर 1 नहीं करना है. यू डिसाइडेड पहले से माइंड मेकअप है. क्वेश्चन नंबर 1 कैन बी इजी ना, एंड नाउ तो इट विल बी एमसीक्यू. So how can you say that we will start from last question? Last question can be dangerous. This all thing, पता नहीं, I don't know from where you have understood this. कि start from last question. Last question is easy question. Who said this point? So this is all bakwas. What I will suggest. देखो question number 1 is mandatory. Now they become MCQs. MCQ I will say, because now the pattern will change. Question number 1 will be MCQ only. Correct, from my point of view. Correct. Now I am coming. Now question number 2, this will be of 30 marks. 30 marks? 5 question दे देगा. Let us assume, let us assume. This pattern is not yet decided, no one has given, I am just assuming. So out of these 5, 4 questions you need to attempt. Out of these 5, 4 questions you need to attempt. ऐसा हो सकता है. Correct. It means question number 1 तो mandatory है. In any case you are supposed to do it. Correct. Now in this you need to find out the order. Order किसका देखना है? Order इसका देखना है ना. Now it is not possible to read the entire question. So what I will suggest, just identify from which chapter it belongs. That will take more. That will take less than 5 minutes. Just identify. For example, 16 you have A, B, C, D. Just find out Ind AS 16, Ind AS 2, Ind AS 4. ऐसे करके लिख दो. Okay, that you can understand by reading the first para or last para. You can identify. There is no need to read the entire question. And even though you read, once again read it. आप पढ़ने के बाद भी फिर से पढ़ना पड़ेगा. So don't waste your time in reading right now. Because when you will answer, you read once again now. Why you are reading? So I will say only identify the chapter and then read only question number 1 fully and identify the correct MCQs. Or I will say if you don't have time, read only question number 1 because वो तो करना ही है ना. तो करना ही है. तो question number 1 read it in that 50 minutes. I will say first do this and 10 minutes में जितना पढ़ सके पढ़ लो fast. Entire 30 question fast reading. You will understand कि हाँ the main point of this question you can also recall the answer also. That is the best way I will say. Then when you have identified this chapter name, now you know which chapter, which topic you are not good. That too you know na. And which topic you are good. बोला रे. Now suppose there is a question of Ind AS 16. You think that Ind AS 16 you are not good. So don't start with that. Start with that chapter in which you feel you are good and start reading that question. And after reading, if you think that no, kuch garbad hai, then go to some other chapter. But in any case, you read all the question only. Then only you can decide which question need to leave and which question need to do. Order you can't decide because it is quite possible if you are starting from the back से ही तूफान मच जाए. So don't make any assumption. I will say start from the chapter in which you think you are perfect. For example, if you think that you are very good in financial instrument, so start with that chapter. If you think that you are not good in Ind AS 1 and 5, so why you are starting with Ind AS 1 and 5? But Ind AS 1 and 5 can be a simple question. That I am saying. So that you can understand only after by reading. Understood? So that I will say give in that 50 minutes give more importance to question number 1 because question number 1 तो पढ़ना ही है चाहे कुछ भी हो जाए तो उसको perfectly पढ़ लो. Read in that way that you are not supposed to read it again fully. Understood? That is my suggestion. Then you can do whatever you want to do because this is your life, your career. You will decide. Understood? Correct. I think I have done my job. I hope you have liked the entire classes and of course this will help you to pass in this examination with a very good mark. I'll be available with you. Correct now. So you are already in my group. Those who have joined, you are already in my group. If you are not in my group, so just you can those who are in live classes for them. So of course you can ask doubt in YouTube also. You can ask all the doubts in YouTube. My best wishes will be for you. This time, छोड़ दो, pass हो जाओ, ठीक है? There is no other things. This time, if it is your first attempt, then also this time. If this is your last attempt, then also this time. Okay? All the best. Bye bye.